says hello. It's Red Ben, and it's April 5th here, but in New York it's April 6th because it's late at night. Um, if you want to get a hold of me on Twitter, it's at Red Ben Trader. If you want to learn more about using an algo to improve your consistency and find setups similar to what I'm going to show you today, you can email my coach, Simon. His email is trade, the letter N, wordperform at gmail.com. As my cat rips up my upholstery. Thanks for that. Yeah, the algo we're going to look at today is the trade and perform algo with some added and like slightly changed signals. But the skeleton of it comes from Simon. So realize that all the ideas I'm sharing today are thanks to his leadership, kind of showing how to discover, test, and execute these setups using the algo. The algo itself is it's intimidating, right? When you look at it, we'll see on any time frame we've got a lot of different signals, a lot of different colors, stuff like that. I want to be super clear that you wouldn't need all of this, right? The truth is this is much more complex than even Simon's using on a regular daily basis, which his looks like this, a lot simpler. I've got extra what's it called, signals on there, primarily because I'm kind of always testing new ideas. So I also use, let me show you, other layouts that are significantly simpler on another screen, that I can use to kind of like hone in on specific setups. So if I know the setup I'm looking for and I'm not like analyzing tick by tick what's going on, trying to figure out which direction we're going or something like that. If I'm just hunting a setup, I can pull up it doesn't look all that much simpler, but it doesn't have all the background colors and it doesn't have the extra indicators and stuff. And there's actually a lot of signals just missing because the only ones showing here, even though it's, are the ones that I use regularly to actually execute orders, right? So we can find, I've got a new setup I want to share. What I've done, I tend to stumble on these somewhat accidentally, the good ones anyway. They often come about from trying to solve problems, just like any other creative endeavor. You know, you come up with an issue, and you as traders, since we're not just trading, but I'm also like the strategist in my business, right? I decide which trades I'm going to execute and what my portfolio looks like and stuff like that, right? I make all those decisions. I'm also the risk manager, right? So when I've got the creative, like, strategy hunting hat on, I'm basically asking questions such as, what's a setup that was working before or seemed to be working but isn't anymore or isn't working as it used to, and why might that be? Not like economically or whatever, not macro reason, but technically, what is tripping up that setup is what you want to ask. When something stops working, or maybe even just when you had a setup that you thought should work, like theoretically, but it's not working as well as you thought it would. You don't just have to trash the idea, right? A lot of times I find that the idea is sound. It's just it needs to be tweaked. There's something missing, and the truth is that the market also changes. Like entire regimes change. You have different leaders. So if you watch just NASDAQ, for instance, there's going to be setups that worked beautifully 3 months ago that either just don't show up very often right now, or don't necessarily have the kind of win rate that they used to. And that's just the way it goes. You're going to have to make some adjustments here and there. Doesn't mean you always need to be trading something new, but you want to have at least a couple different setups like ready to use, or at least return to, so that if what you're doing stops working as well as you expected it to, or as well as it was working, you know immediately what else you can try. And so what I'm going to show you is a setup that I was watching. I wasn't necessarily using it because it wasn't working how I expected it to. And today I was digging into that a little bit. And like I said, it's really important to ask questions such as, theoretically this should work. Why isn't it working? Right? Like, what am I missing here? Because if you're, I mean, unless you aren't interested in finding new strategies, and which is fine. You know, some people don't. They're just like, hey, give me the strategy and I'll just run it. And you just want to execute it. That's cool, right? Like that's why the rooms like Simon's exists, right? But some of us actually kind of enjoy like the process of like thinking through like, this should work. So what do we need to do to see that, right? And that's just something I'm good at. So the setup itself, the initial setup that I was finding, it relates to these blue and yellow dots. And so what these are, all of these signals are just indicators coming off of the footprint. So if you look, will that show up there? Probably not, because it's a new word. So it's pointing, oh, it does. Good. So if you look at the footprint, there should be a second one. There we go. So it is this and this, right? So I'm not going to go into how to build it, but realize that all Sierra Charts is doing is it's looking for conditions, right? And so this was supposedly the bullish condition, and this one was the bearish condition that I had it looking for. And like I said, I knew theoretically it should be meaningful. It's related to volume, and it's actually not how much volume. It has nothing to do with how much volume happens. It's not like relative volume. It's looking at where the volume occurs. And it's looking for situations where the volume is coming at a time when we wouldn't necessarily expect it. Like, not in a place that makes a lot of sense. So what I'm calling volume anomalies, which unfortunately is kind of a term that's already being used on a profile. It's not the same thing as a profile anomaly, but it's kind of the same concept, only using the footprint. So the dots that show up here, like I said, are going to be on the blue ones on the lows, are going to be on bullish bars. I mean, all the bullish bars will have wicks on the bottom. And the yellow ones are going to be on bearish bars. They'll be at the highs. The way I initially thought they should work, and again, it's not that this doesn't work, but it doesn't work consistently. The way I thought it would initially work is, as long as the sellers, for instance, show up and defend this area, it's still bearish, was my initial thinking. And like I said, that's not wrong. If they show up, it is bearish, right? That's true. But what's not true is the inverse. If they don't show up to defend it, and instead they trade below it, it's not necessarily bearish, right? I know that if they defend it, I can probably get a bull trade, right, on the bull side. So, like, let me find one. So this bar here with the blue dot, the little dash there is where most of the volume is in the bar. That's the VPOC of the bar. And all those VPOCs are connected by that yellow line. That's why that yellow line's there. It's connecting the VPOCs, showing me where volume is shifting from Renko bar to Renko bar. So this bar with the blue dot, when the auction returned to that range, buyers defended the area, and there's an opportunity here to take a long, right? So that idea holds true as long as they defend it. What was throwing me off, and the question I was asking is, why is it then that we can trade below them, yet it's not bearish? And I was like, what's up with that? Like, why would it be the case that if you defend it, right, if like the volume's here, if most of the volume's here, and they come back and they defend it, that's bullish. But then how come when you lose it, how could that be bullish too, right? Like that it didn't make sense to me. I was just like, what's up with that? So I went through a bunch of different time frames, a bunch of different days, just doing some back testing on it manually, and started to see a pattern. And the general pattern is this. It's that I was looking at things a little too black and white. It's true that if they defend it, if they defend the range, right? If this, let's say this range here, if this range here is defended and they can only put purple bars below it, and then immediately after that, it gets bullish usually with a triangle, a white triangle up, that it's usually ready to go right away. So for instance, here, after going higher and returning into that range, if you get a triangle up, it's usually good to go, right? It's still actually true. Very simple, but it doesn't always set up that way. If it does set up that way, it's probably just trending, right? And when it's trending, the triangles in the direction of the trend are almost always excellent entries anyway. So, like I said, I was like, okay, well, that's cool. I kind of already knew that. But then, like I said, if that's how this works, that if they defend that VPOC, that it's bullish, then why is it that when we get the volume anomaly and they not only beat it with the purple bar, but they actually get VPOC below it on a bearish bar? Like, if my initial theory was correct that this volume anomaly here, which technically it happens right at the like in the wick of the bar more so than up here, if that had something to do with whether or not it was going to be bullish or bearish, then if we trade lower than it and shift volume lower than it, it should be bearish, right? No, it's not, right? And so I was just like, okay, well, what if it's not immediate? Maybe getting under it is not necessarily bearish right now, but it may mean that bears are for the first time since when we since we weren't holding them right earlier, perhaps sellers have just entered the market. And that's why we're getting under it. So it doesn't mean to sell. It's actually an opportunity to trap them in a squeeze if it's trending, or it's an opportunity to wait and see what happens after we hit resistance, because this could then be whenever like if they fail to continue after doing that, perhaps then it is bearish. See that? So the way this works execution like wise, the way you think about this for actually using the trade, like that's theoretically how it works, right? It's not as simple as lose the level and it's bearish. That's not accurate. It's true that if you hold the level, it is bullish. Well, bullish enough to take a trade on futures, a day trade on futures. But also, if you reclaim it in a certain way, it can also be extremely bullish, but maybe only for the time being. So here, for instance, blue dot, trade below, right? Get a VPOC below it, right here. This is not a good time to short. That is not what it means. Instead, it actually means watch that bar and see what happens here. And if we get a certain pattern, we might actually have a buy opportunity. But even more importantly, if we then give it back again, now it's probably bearish, and we just have to wait for that area to become resistance to actually trade it, which becomes here for the short. So it's like I had one question of like, why doesn't this work how I expect? And the result from answering that question is now adjusting, improving the original setup, but actually getting a new one as well. So here's what the setup actually looks like. So let me just go to a new spot so you don't know I'm just like making it up based on what we're seeing. So, and again, these aren't going to work 100% of the time, right? But it does work a lot, and it's actually working on most time frames. This is the 15 tick here. I must have jumped onto the smaller time frame. It doesn't matter. It works everywhere. So, okay, here is how it works. Step number one, you need to get a dot, right? Let's just look at the bullish version now, and I'll show you the bearish one after. It's easier to do these one at a time rather than going back and forth. It's easier to like decide, am I bearish or bullish, and then look for a bullish trade. So let's imagine that we are looking for a bullish trade for one reason or another, and then there is our first dot. So the next stage is watch what happens when price returns to that area. The number one possibility is that the area actually just holds, and in that case, if it's trending, we may just be able to buy a triangle up. The other option, if we're not certain that it's bullish, if it's not a clear trend, then what we do is mark the low of the dot. As long as they at least put one bar above it, so they had some continuation, there's a chance that they can handle a pullback. And if that pullback produces a bearish bar that's not purple underneath it, particularly if you get a VPOC below it, okay, like this, when you drop that VPOC line, the yellow line, down below on a bar that's not purple, just like this. So if this occurs, you can't just be bullish immediately. You have to now move the line in the sand to the VPOC of this bar, so that's that little dash right there, okay? And now that VPOC, where all the volume was in that bar, where the majority of the volume was in that bar, we need a certain thing to happen to be able to be bullish again. And that certain thing is that when we need to return to that price, reclaim that price, and we need to push a VPOC on a bullish bar above that level, the VPOC of the bar with the dot. And that has to happen on a bar with a triangle or the next bar after that, specifically. And I'll show you why. So here we have a bullish triangle, a white triangle. And if you look at the VPOC line, the yellow line, it is above, right here, this VPOC line. Kind of hard to point to because it wants to point to there, right there. That VPOC line there is above the VPOC that I drew the line on here with the dot, right? So this VPOC is higher than this one, and there's a triangle. So it could have been this bar, and if this one wouldn't have done it, it could have been the next one as long as it's bullish. If this very next one is also bullish, and the VPOC is above it, that also would qualify as good enough for an entry. The key here is your stop needs to go below this bar, not the triangle bar, but the one before it, which is likely to get an apex, one of these little sideways, these little flags. These flags show up 3 bars later, so you don't know it's there yet. It's not used for an entry signal. It's used for to relate to past like highs and lows, swing highs and swing lows. So you don't need it right away. I mean, it'd be great if you knew when it was right away, but you don't. It's the only signal that actually like it doesn't repaint, but it like shows up late. We wait until it's confirmed and there's been a couple extra bars, and then it'll show up. So now, since we're looking to the past, it's going to already be there. We wouldn't have known it was there, but we find the triangle, and then we look 1 bar behind, and you got to put your stop. I have to put my stop at least a point behind that, because it can retest this VPOC here. That's not that unusual. But once we've gotten a VPOC above this line again, the volume point of control of the bar with the volume anomaly. If we push that yellow line above it on a bullish bar, and that bar has a triangle associated with it, or it's the very next bar, chances are this is going to hold and this is going to be tested. Now, this will work way better if you are clearly trending bullish visually, or if your resistance is significantly farther away, because your risk to reward here needs to be, you want one-to-one risk reward, right? If I get in here, or on this pullback here, let's say back at the level, I want to make sure that I have risk reward to get my this trade to work out for me, because it's not going to work 100% of the time. Sometimes it's going to fail, so you don't want to have your resistance too close. This is about as close as I'd be willing to take it, is another bar here. It needs to have at least another bar. That's why I said that it's got to continue at least one bar up, because otherwise your resistance is literally right here, and you're going to run right into it and just fail, right? So it needs to continue one bar up, and it needs to put a VPOC above the high, preferably. This one actually did not. If you look closely, that VPOC is not above the high, so see how this VPOC is not above this high? Bulls were unable to extend, to push volume any higher than this high. So that does make this less likely to work. Most likely, I'm not certain about that. I don't have enough data, but certainly if you get that dash above it, you're in real good shape for risk reward wise. And then it's just a matter of getting VPOC underneath this dot on a bearish bar that's not purple, then reclaiming that VPOC and getting a VPOC on a bullish bar above it. But that bullish bar has to be the triangle or the one after it. And then the result is, like I said, this usually holds. And the entry can be anywhere in this zone, right? And your primary target is this resistance. So in this case, we've actually hit the primary target already. It doesn't mean you have to exit, but you don't, the entry, the setup has played out at this point. And so now you have to ask yourself, do I have a higher time frame reason for this to go higher? For instance, can I trade over yellow dots? And the answer is yes. We've broken yellow dots, right? We've broken above yellow dots. So there's a chance that there's momentum in the market. And then here, yellow dot breaking above a yellow dot. There's a chance there's momentum in the market. You probably want to hold a runner. If you can't break over yellow dots, the chances that you're going to go any higher is pretty low. And so here your runners pay you pretty good. Okay, here's another one. Blue dot, right? We don't push any higher. This one's going to be problematic, let's just say, right? So we'll just skip it. This one, blue dot, they did push higher, right? So if we can trade behind this on a bar that is bearish, that's not purple, and put a VPOC underneath it, and then reclaim this VPOC on a triangle up with a VPOC above it, all good. Otherwise, it's just going to stay bullish. Yeah, it's just going to stay bullish. Okay, here's one, right? Pushed one bar above, printed after printing a blue dot, traded below it with a VPOC below it, right? So for this to be bullish, we need to reclaim that VPOC right there on a bar that's a triangle or the bar that's after the triangle. Otherwise, it's over. One hint that I'm noticing a pattern of is if you break below a dot, a blue dot like this, and put a bar below it, and the very next rotation, print a dot, get below it right away, there are sellers in the market. It might still go higher, but there's no doubt at this point that sellers are not giving up. So you're going to have a harder time continuing higher. You're probably on the right side. If it was a trend up, you've probably moved over to the right side, and now of the curve, right? And now getting over this and staying over this is going to be significantly harder because you've traveled under a blue dot here, and then the very next one you travel under the blue dot. See here, there were no blue dots here on this one, and I'm looking at the little flag here. It's like that's a rotation, right? So no blue dots broken there. Blue dot not broken. Blue dot not broken. Blue dot not broken. Blue dot broken, right? That one's fine. Sellers are in the market, but we can trap them. They do, right? We didn't have a trade set up because it didn't continue higher, but they do trap them and they capitulate, and we steal those stops. But if they now get under that blue dot, which they do, now what it's basically saying is sellers got their stop stolen, yet they sold again. It's probably bearish, right? If that happens, it doesn't mean to immediately short it, but you might want to be a little bit more cautious from this point forward. And yeah, if you got a short setup now, I'd say it's probably okay to start looking for them if you want. So let's see, but let's stick to the long side just to keep things easier, and then we'll do the shorts in a minute. So there's a blue dot. Let's see if we have continued higher. Now we need to take it out, and we don't. So sellers put in a little push, and now they're trying again. Okay, here we go. Traded under it, right? Now, if we reclaim that with a triangle, it can squeeze. Looks like it's not going to. That's the high day. And they just, not surprisingly, they just let it go, right? Because they've already traded underneath blue dots before. And if you see this blue dot, maybe a better way to explain this, the blue dot that got traded under, those stops would have gone right here, right? We trade there. They get all their stops stolen, and they sell again. That's not usually bullish. But it's okay with this setup because it just won't fire. I'm not going to take a stop even. I'll just miss the short if I don't realize that, because it's this setup is conservative enough that it's just not going to fire. So this one now gets traded under, right? So if we can reclaim that with a triangle, it's technically bullish. And what you'll see is if it's not bullish, it usually won't. See how it kind of becomes resistance? There's sellers waiting there, right? No blue dots whatsoever. So if you were bullish, you probably shouldn't be. And they can't put any blue dots in here. So there's just no sign of any like volume where it doesn't belong. Okay, we finally get a blue dot. Now that could just be the low, right? And then this setup will not catch a low, right? I gotta be very clear about that. But since we traded higher, if we go under it and then reclaim it, it could set up. Okay, we get under it with the VPOC. Line moves to this VPOC, right? On the one with the dot. We now have to reclaim this with a triangle. Oh, sorry about that. I just was noticing the thing. Does that sound a little bit better? Are you showing, or what is showing the volume? Not seeing any volume bars. Yes, the volume is it's calculated into the algo. The algo is you might have missed the beginning. So the algo that's printing all of the colors and the dots and all that stuff, it's reading this for me. I don't have to look at volume. I just wait for the algo to give me a dot. That's that. So I don't have to. I don't need volume at all. Like I can just wait for the setup. The algo is telling me which volume to pay attention to, which bar to pay attention to. So I'm calling them volume anomalies, but it's just the condition is already pre-programmed into the algo. So all I have to do is just wait for the dot. I don't have to analyze anything. I can just say this setup is now valid, and therefore I can buy it. Right? When I programmed it, I had to think about it. But now the algo's watching the footprint for me, reading volume for me. You know, so it's that's a good question though. Okay, so it can't reclaim it. It's still bearish, right? Something I didn't mention. The reclaim needs to be relatively soon. You can't like leave this here for multiple rotations. It needs to like leave it and then come right back and reclaim it. That's important. that I forgot to mention. That's a very important aspect. So, but you see how this becomes now resistance? Clear indication that it's not bullish. Now the bear trades are setting up. So let me show you the bear trades because they're going to be a little, you're going to have more of them here. So because it looks like I'm looking at this morning. So, but I could pick anywhere. And it's going to pretty much work the same. So here's where I said the bears, we clearly are starting to see sellers in the market. Let's go a little earlier so we might see a stop because some of these aren't going to work. So if you thought it was bearish here, and then we stop out the yellow dot, you'd have to reclaim this volume point of control, which again is the yellow line, and there's dashes everywhere where the VPOC is in the Renko bar, right? So we beat it. And first of all, it continued for one more bar. That's important. We beat it. Now we need to take it back with a triangle bar or the very next bar after the triangle. So in this case, if you thought it was short here, this one would stop, right? And you took this trade here, that one would not work. And your stop would have to go back here. So you might not want to enter here. That's a pretty big stop. But the reason you wouldn't take this, perhaps, is if you identified that you're shorting deep in the hole and your target is technically here, right? And your stop has to go up here. So that's not even it's going to be pretty hard to get 1-to-1, even if you come all the way back to the VPOC. So even if you waited until it came back here, and everything worked out well, best case scenario, you're almost getting 1-to-1. I'm not saying it's horrible. It's just aggressive, right? To short that far in the hole, but it's valid. It like I said, they're not going to work 100% of the time. The chart is in Central Time Zone. Sure, I can look wherever you want. So let's go to I think there was econ, so I assume you'd want me to skip that. Let's just go to after the econ was out. Here we go. So, all right. So here we go. Let's go back to the first one so we don't miss one. So I see one over here. This one never got stopped out, right? Continued, it just became resistance, which is, like I said in the beginning, that was my original idea with building this signal, was because I saw this occurring on the footprint, right? If you look at the footprint here, I'll show you. If you look at the footprint here, let's see, where is she? Right there. Yes, is that right? Yeah. So if you look at the footprint here, once you've gotten once this bar prints here, it identifies this high as an important location. And that high then, becomes resistance, right? And that's normal when it's trending. And like I said, I already knew about that. I think I even have a video about it. But that was my original idea with how I thought it would work. But what I was surprised to find is when you get another dot and they continue, trade behind it, and then reclaim the VPOC of that bar. So the yellow dash, the yellow dash on the bar with the yellow dot. Here we go. Right there. If they can reclaim that, right, with either preferably a triangle, but otherwise the bar after a triangle, that chances are you're going to retest support. Whether or not you go further than that will depend on the higher time frame, right? But this works on the higher time frame, so you could just look and see, do I have it on the higher time frame or not, or some other setup, right? But the idea is
that's really, now this is such a tiny little rotation that this one might not be worth taking straight off the bat, right? But and realize if your stop is too tight, if it's real tight, this can happen. You can get tagged and then it triggers again. That's just reality, right? Is it going to happen a lot? No, but sometimes it will, especially when it's consolidating like this. And especially to the short side. ES does this too. There's really no way around this. In particular to the short side, you're gonna get these little. What it basically is it's people buying the breakout where they really maybe shouldn't, and then people following them through, pushing it more than just a couple ticks. Because normally I put my stop like 4 ticks above the high, and it's usually okay, right? Like if you put your four ticks above the high, it's usually fine. But if you're consolidating and you see the swing high here and don't realize that this is the high that actually matters, you could get tagged by putting your stop where I said to put it, a point behind the bar before the triangle. If it's consolidating, that's potentially not going to be enough because there's a high right here. And like I said, that might mean your risk reward is shit, in which case you should skip the trade, right? Or wait for this and then see if you can get another setup, right? Because here you get it there on the reclaim, and your stop can go here. Oops. And now your risk reward looks significantly better, you know? So as long as you've got risk reward there, it's fine. So that's the next one. Then now see the problem with this one, it's not that it's wrong, but it didn't go very far here. So your risk reward might not be very good. That's why that rule is there, that I want it to kind of, I prefer that it at least gets a pretty big wick here, if not an entire bar, because that's my target. So the VPOC is that yellow horizontal across the candle, yes. Correct. So that's so-called VPOC generated on the basis of the 15 tick file. I'm not gonna, so this algo is built by Simon, my coach. I'm not allowed to tell you how to build it. I'm not trying to I'm not interested in people trying to rebuild his work. So sorry, but like those questions of like, how do I, how exactly is that built? Like, it's kind of rude. Sorry. Like he's, when you've got something that someone's worked, like built their life work to build, hours and hours and hours, it's not fair just to expect someone to tell you what the exact conditions are. I'm already giving you enough information to understand why it works. I'm not trying to teach somebody how to rebuild his system. So just because, I mean, if you really want to use it, just get it. You know what I mean? So everything here is all the signals, all the lines, all the dots, all the colors, they're all coming from the algo. Right? Like that's the thing. Like they're all preconditioned based on reading the footprint. So I'm not allowed, and I don't think it's appropriate to like tell you how to build a signal inside of his algo that he spent years putting together. Like that's right. Like that, especially not when like we're all purchasing this, that's I don't think that's ethical. But I'll tell you it's a VPOC, but from there be willing to, realize like building these is not easy, but learning to execute them is also not easy. So don't worry about building it. It's already here. So It's like I said, um, it doesn't matter. Yeah, like I understand why. I understand you want to know, but what I'm telling you is it doesn't matter what the concept like. All you need to know is it's volume based. That's all I'm saying. Like if you know that, like you can see it. Like I said, I'm not going to tell you how to build it. I can tell you that it's a VPOC. And if you want to experiment with it and see if you can figure it out, spend time doing it. But let's not try to like reproduce the wheel here when, like I said, the whole point of this is to show you that once you have these signals on the chart, there's consistency now with how the market's going to react to the signals, and that is the point. It doesn't matter. Like you can, if you want to experiment with different types of VPOCs, like do it. Yeah. What is the concept of use of VPOC? Volume point of control. Yeah, it's related to the volume point of control. If you know what a volume point of control is, you can picture what a VPOC might be. And like the condition, I can't share the conditions. I'm not going to. But like I said, if you wanna, if you're interested in it, like talk to Simon. You know, he'll give you a free pass to the room and you can check it out. Okay, that's. I mean, yeah. It's. I'm not. I'm not gonna. I can tell you that. You might have a VPOC indicator, but if like this may not be the same at all, right? Like the conditions are related to volume, and that's about as much as I'm going to give away when it comes to how to actually build the signals. Just know that I'm having the algo watch volume and tell me when certain conditions are there. That's all. Okay, so we got yellow dot there. All right, we got a little bit of a wick. So expectancy might be questionable, right? But we do stop it out. And then we'd have to put our line here on the VPOC. And either the triangle or the next bar needs to reclaim that. And it does, right? The problem, again, here is our stop needs to go back there. And you didn't really get any pullback or anything to make that like a good trade. So it doesn't mean you can't take it, no, but you better have a big time frame reason to think that this is going to break. Sure. Eastern, Central, 2:30 Central. You bet. You bet. Let's see. So that is you were trading the here. Yeah. All right. Okay. So let's start back here, like right at like 2, just so we can understand context here, and we'll just see if it even set up with this setup. It might not have, right? So the first one would have been you might have thought that it was a long if you took this out and then reclaimed it, but it did not. It didn't reclaim it. It went lower. It became resistance. So that one did not fire. This one, it didn't fire in the reclaim way. It just became resistance. So if you knew it was short, you could just short this. This one became resistance, right? The bar VPOC. Cool. I'm glad you appreciate it. Okay, so here is hi cat. Yes. Okay, he's very jealous. So okay, so if you thought it was bearish here, you've got a triangle down with VPOC below the where VPOC was on this bar. So VPOC was here. My goodness, cat. Sorry. And then it shifted up, and then came back down and shifted down, right? And it's on a triangle, and it's lower than this one. So that one does qualify. And if it's bearish, it's gonna come back to the support. And if I remember correctly, this goes higher, and it does. Like I said, these are not all going to work, especially if you're trying to trade it against the trend. So if you can identify that this is bullish, you could probably skip that, right? But if you were thinking it was bearish here, I'm going to wait for a retrace and see if it sets up there, you could take a stop. You know, it's definitely going to stop sometimes. No, here's a blue dot, but I don't think it got taken out. So this one, it didn't have much of a wick, but it did get taken out. Let's see if that reclaims. Nope. See, no triangle down there. Got under it, and then buyer showed up right away. Okay, let's see if this one stops out. Okay, this one should stop out, and it does. Okay, so now do we get this bullish bar to reclaim? We don't. So no setup there. These yellow ones do not reclaim. This one doesn't reclaim. I mean, well, they're not broken. This one doesn't break. This one doesn't break. This one breaks, but doesn't look like it's going to reclaim. So on this time frame, it didn't set up. Is this way, right? Now, were there ways to catch this? There were. I traded it. I didn't know about this setup because this is something I just kind of figured out today after the market. But there are many setups, many combos, and some examples, for instance, of different setups are, if you get one of these rings at support and you've already gotten a low in and it comes back and it builds this ring and it's followed by a triangle, it's usually bullish. And this level, that range, is usually support. Okay. So this, when that holds, it makes that triangle a good long. This one. Oops, it's pink, so you can't see it. Okay, let me do this one more time because for some reason I can't grab that. So you need a totally different setup. You need a low, and then a bar with a blue ring on it, and a triangle up. Okay, that's step number one. That's an aggressive entry. The conservative entry, this will only work if it's at support. You don't want to do this if it's not at least consolidating. Don't do it when it's dropping, you know, like with energy. It's got to at least be calm, if not starting to turn around. Like it needs to actually have like either a lack of momentum completely or a sense that it might be bullish. Maybe a level that you were looking at, yesterday's low, stuff like that. But the more conservative one is take that level and wait for it to test it. And if they bounce off of it and produce a triangle, that is usually good to go for 20 plus points. Shows post-market, super low volume. So no, I mean, no, not really. It'll still work. Here, I'll show you. Let's see. Oh, well, we don't have a lot of dots, but let's see if we got one. So these didn't set up. These here. Does this one set up? Not yet. So this, for this to set up bearish, it would need to come back to 13.035 and print a triangle or the bar after the triangle underneath that line to be bearish. And then for this conservative setup to print bullish, we'd have to come behind this and then reclaim 13.030. So it's not that it can't work the same. It's just that it's going to be so slow printing the bars that you won't have very many opportunities. So it's not, you won't need a different approach though. It'll still work. Here, let me see if I can find one from like yesterday night. Okay, so here is overnight. Okay, so let's see if we can. So it might. Let's see if it's set up here. So blue doesn't go anywhere. Doesn't get stopped out. That doesn't do it. I say good. Yellow doesn't go anywhere. Gets stopped out. Okay. Sorry about that. Yes. Okay. So he gets stopped out, right? And then we reclaim it with a triangle. And if you look, the VPOC is equal to or lower than. See that? It's the little dash is below it, right? So once you get this bar, our expectation should be support is getting tested. And as long as we hold this, we can partake in it. And so you could technically sell any of this retrace with a stop up here. So you could like take a sell here, and then as it pulls back, maybe take another one, and then if it like turns around, take a third one. If your max like leverage is like like that's I'll often do it that way, where like if I'm willing to take like 3 contracts, but I don't really want to take a stop of this size on 3 contracts, like I'll figure out what my max loss like should be, what my max leverage should be, and then determine like, can I, how far does this have to pull back for me to add 2 more contracts and still be under my risk limit. And that way, when you get these really nice retraces, rather than getting like anxious about, oh my God, it's going to stop out, I'm going to lose. Instead, you're like, you're ready, right? You're like, yeah, give me more. Right. And getting that shift in attitude really helps. Currently, actual so I mean yes. Yeah. And I don't I'm not against that. I think they're very related. Although lately they haven't been matching, that's for sure. But they're definitely related. Okay, so let me just see here. We were looking so that one worked to the short side. Did this setup, went higher, stopped it out. So if you thought it was bullish, did it get, got a VPOC below this one, right? Now we would need to reclaim this on a triangle. See, the triangle doesn't get VPOC above that line. So right away, it's like, that's concerning. But then they do put another bar in after that. So if you thought it was bullish, chances are we're headed for this resistance, right? But you got to put your stop. If you get in there, you'd have to put your stop all the way down here. So risk reward is questionable. And they just crush it, and then the short trade sets up, and it's like, oh, it's bearish, right? So this is why it's important, I think, to first determine like where you expect like where you'd like to participate. You need location to make trades work. You don't just want to randomly pick, like when you're actually trading, like not just back testing. You don't just want to randomly pick a spot on a chart and start buying, right? You'd have to actually have some context of like, well, what happened here before, and did I actually have any reason to think that we're going a lot higher than this? And then when you look at this and it's like, oh, there's resistance right there. Maybe I don't want to be a buyer right here, right? So like, if you do, the algo doesn't know that this is here. The algo is looking at order flow, right? It's my job to know that I'm at resistance. The algo is going to set up just the same. It's not that sophisticated. It's just doing the work of reading the DOM and reading the footprint for me. It's not telling me which trades are going to work and which ones aren't. But a big part about whether or not your trade's going to work or not is risk reward And risk reward is determined basically by expectancy. And expectancy is determined by location. So you need to know how to read a chart still. What you don't need to know is how to read a footprint. You can trade this without looking at a footprint or a DOM, really, as long as you have a way to enter your order. You don't have to like read tape. It's doing that part for you, but you still have to read a candlestick chart or Branko or whatever. But you need to know where you are on a chart, because otherwise they will fail more. I mean, they're going to fail anyway, but you can improve your win rate significantly by just not buying into resistance and not selling into support. Okay, so it went further. It stopped it out, right? So now if it reclaims this, it's bearish. But it's got to do it on a triangle bar or the bar after the triangle. Okay, so that triangle bar didn't quite get the VPOC below it, so already it's going to be a riskier trade. And it does trigger here. So if you had a reason to believe that you should be bearish, and you have risk reward probably behind you'd probably have to put it behind the swing high flag, so you don't get swept. Like, that is questionable risk reward, right? Which would tell me the only way I'm taking this trade is if I get a retrace. Like that. That might work better. And there you go. So rather than taking it here when it triggered, I said, I don't have risk reward here to take a short here, even though it might work, because I've got to put my stop back here. So I'll wait and see if I can get one contract back here. And then if it fills, great. And if not, so be it, right? And it just goes without you and you don't lose anything. But usually it's going to go to support when we get this signal. So the question, it shouldn't be, is this going to work or not? The question we have to ask ourselves is it worth the risk or not? Because no one knows if it's going to work. But we do get to choose when we trade and when we don't. So here, this one doesn't really go anywhere, right? So that's warning number one. Then it stops out the blue dot. So now we need to reclaim the VPOC of that bar on a triangle or the bar after it. And we do not. We can't get the VPOCs of those two bars above it. Not bearish, or not bullish, right? And so that one doesn't trigger. None of these this one might. There we go. So it goes somewhere, stops it out. Can it reclaim this VPOC on a triangle? No. So the bar after the triangle. Triangle, bar after the triangle, VPOC below. Not quite as high expectancy as the triangle itself, but still good to take out support as long as you can put your stop here. And that's pretty much 1-to-1. So I might be willing to take that trade exactly how it is. And it might stop. And this one stops. Like I said, some of these are going to stop. Now, one way you might have noticed that it was problematic was you had a blue dot here. See that? And you had just stopped it out, right? When it triggered, when this one triggered, oops, it was here. When this one triggered here, right? It was setting up bullish if it reclaimed here. So at this point, right here, you've actually triggered long. And there's really no reason to stay short now. So if you wanted to, you could scratch the trade here and flip, right? Because your stop on the long, so the long triggers here. And so any pullback all the way down to the swing low, which is the little flag, is an acceptable spot to long. So if you did take the short and it starts to trade against you and you're like, oh shit, the long just triggered, you don't have to like panic out, but you might want to put a sell order, a limit sell back at your entry or so, and see if you can't reverse, right? And then that one pays you back. And that's the thing, even if you took the stop, right? This is an important concept. Even if you didn't, let's say you only trade one direction, right? And you took the stop. The important thing to see is that when they work well enough that you're going to pay for the stop as long as it works often enough. Because the expectancy for the trade when it works is high. So and the win rate's high. But some of them are going to stop out. So as long as you keep, like, even if you're trading this one directional, right? And you're just like, I don't want a short, I just want a long. Like, this one works, and that pays for the one earlier that stopped. Is it this one? No, that one didn't. One of the longs stopped earlier. So even if you were just trading long, is it this one? This one stopped, right? Even if you traded right into resistance and took that stop, right? That stop was... Okay. Sorry, cat. So if you got in, let's say you got in as far as you could, way up here. On the 15 tick, you got in at maybe, like, let's say 38, and your stop would have to be behind. Yeah, but it would probably have to be behind this swing low, so it's pretty big. It'd have to be here. So what did I say for 38 and stop 22? So it's not crazy. 16 points. I mean, it's not unreasonable. But when it works in that same direction, let's say you got this as late as possible. So you got it here at like 97. Your stop, your risk is like 84, right? So again, like maybe 13 points. Certainly no more than 20. And your expectancy, even if you just sold when you first saw a bearish bar, right? You're just like, I don't have a target in mind. I mean, here the target was pretty clear, right? But even if you didn't have a target in mind, and you're just like, I'm just going to sell if it gives me any pressure whatsoever, you're going 97, and let's say you got out after this bar closed at like 11. Like, you're still making, you're getting, what is that, 2 to 1? Like, that pays for a lot of stops. And it's better way more than 30% of the time. So, way more. In fact, I'd say it's better, it works more than 50% of the time. Even on the 15 tick. Now, what's really crazy is this actually works on other time frames too. So, I can go to chart settings, and I can change this bar period to something much larger. Now, keep in mind the stops are going to be bigger when they don't work, right? But the trades themselves are going to set up exactly the same. And the expectancy is going to be better because the bars are all bigger. The hard part is figuring out how to leverage it because your stops are going to be huge. But you could do it with products like micros or calls and puts on SPY or QQQ, right? It's not like it can't be done. Let's see here. I want to go... I did this on the wrong one, but let me switch to Star Try Clean. Is that... Yeah, that's a lot easier to read. Okay. So, and then we'll just go back to like a random day a while ago. Okay, does this have... Yeah, that has everything. That's as far back as I can go as this week, I guess. So on Monday, let's say you knew nothing about what's going on the bigger time frame. You're just going to take trades that they set up, right? Like which will give us the worst win rate possible because we're not even thinking about context. So here you have a yellow dot. It gets oh wait, we had another yellow dot. So I don't think you can carry them over. I don't think you can do that. It would have to be this one. That one does not set up. And then you don't get one here. So it's this one. Pretty sure you can't carry it over multiple. I don't think you can do that. So this one just doesn't set up. This one doesn't set up either. If you did do it, it would be stopped, fired here. And you might have gotten It didn't come to support right away. It stopped you out and then went, because like I said, and that's why I don't think it's a good idea to take them later. I think it has to be relatively, it's got to be like before another dot prints. That's the easy way to say it. So like I don't want to use this one once this one prints. Pretty sure that will protect against this like madness where they spike way above it. That should help a lot. Okay, so this one stopped out. It didn't go anywhere, so the risk reward might be awful. But let's just see if it sets up. Does it get the VPOC above it? It does. It's on a pink bar though, so this one might not work. The pink and purple bars suggest that buyers and sellers, like the order book is getting thinned, liquidity is going down, and that's why price is moving. So they're not as reliable. It's like an advertisement of price, but the volume in here is like not that reliable because the movement is primarily because people are pulling their order from the order book. So it messes with things significantly. If you wait for a bar that's not pink to get a VPOC above it, you'll filter out a bunch of stops. But technically, it would trigger there, and you'd have to put your stop up here, and your target is down here, which is like not good risk reward, right? So if you were considering that, probably not a good idea to shorten the hole. But let me just see if it works. Yeah, it stops. I'm not surprised. Shorting that deep in the hole is rarely a good idea. And like I said, the pink bar is going to make things harder anyway. You really want bars that aren't pink stopping it out. It's okay if a pink bar does it, but you better get a bar that's like white or like not pink and purple. So this one doesn't, and plus it didn't go anywhere, so you didn't have any expectancy. So if you were going to skip one, that would be a good one to skip. Okay, so none of these set up. That one doesn't come back. Let's see if this long sets up. So you get a bar that's not pink, but you don't get the VPOC below it. So this is just bullish. They can't even get under it, right? So it's just not. It's not the same setup. It's the earlier setup I talked about before, where if you can't get that yellow line below this, it's trending, right? And the only time we do get the yellow line below it, they close bullish with aggression, which is the stars. So like if you weren't sure if it was bullish or not, now you know. Because the moment they get VPOC below this low, an aggressive trader shows up and buys it. So don't short, right? If that happens, that's an easy way to trade the trend, and I already knew about that. But the reclaim thing is new. Okay, so we're not going to get them to set up very often because NQ doesn't. It's such a big time frame that we're not going to have these big. This week we haven't had huge sweeps. Later in the week we might see some. Okay, so trade it under, but no VPOC under it. It's got to get a VPOC under it. There we go. Now we need to reclaim this with a triangle to be bullish. Nope. See how it's resistance? That's a pretty good sign it's bearish. Let's see if this one, here we go, did not get VPOC above. It's probably bearish. And there's the star down, signaling aggression. It's the exact opposite as this. It's the inverse of this setup. Sorry, I did it here. It's the inverse of this setup where you get VPOC below it, but it turns into a star. Where was that? Whoops, went too far. Here. No VPOC not above it. VPOC above it closes a star. It's bearish. And that's just a momentum trade. And so you hold runners for that one. No reclaims though. This support, they try to make it resistance. That guy's going to probably get trapped. Likely not a good idea to short this, but let's just see if it sets up. Oh, they do. They don't trap them. They never get above it. So once again, VPOC gets above the line. It closes bearish with a star, and it goes lower. Exactly the same setup. Like I said, I thought if they would have gotten above this star with VPOC, you really want to stop shorting because he's going to get, that aggressive trader is going to get stuck at the low. So whenever you see stars at the low or stars at the high in the to the upside, let me see if we had one up here. So here, star at the low. So see this aggressive trader at the low, near the low. When they get VPOC above this on a bar, so the pink bar, it's like it might count, but it might have just gotten VPOC up there because people were pulling their orders. Once you get VPOC up there on a bar that's not pink, it's definitely not coming back. So it might be a little bit late to buy it, but you know, don't be short. Same with the X's, same exact thing. And then on the opposite side, you'll see it set up as well. So see how the X up here? Once you trade under him, this is resistance now because now he's stuck. He's an aggressive trader up there selling. I'm sorry, buying up here. You've traded under them, so we come back to their location and they're sellers. Right? Well, the same exact thing can happen going the other direction. It just didn't here. Okay, so dots. That's a different setup though. Okay, so let's try this one. Does this one work? Get below. Reclaim it with a triangle or the bar above it. Oh man, no, this is right. See, we got more blue dots, so I'm not sure if this still counts, but it would be here. Sorry, doing some laundry late at night. Yeah, it kind of works. Does it get the expectancy should be this? Yeah, I mean it works. I'll call that a win. Like I said, I don't know what to do about the fact that we've got more blue dots down here. I'm not sure how often that actually works out so late. It's only because it chopped back and forth that I think it might still work. It didn't actually leave the area, so it might be okay. But usually you want to use the most recent one. And really, this is not the kind of trading that I prefer. I want it to be sweeping and actually moving for me to trade it. Okay, here we go. Stopped out. Does it reclaim it? No. This one might get stopped. Not with the VPOC. This one gets stopped. Doesn't get reclaimed. This one, see here, it's resistance again, but there's no star, so there's not really... The star's late. These guys might get trapped. See how late this is? So what I mean by that is this is resistance. The aggressive traders should have shown up there if they were committed to pushing us a lot lower. They didn't show up there, and once they broke the low, the local low, they needed aggression just to get down there. See that? This star is not placed appropriately. That's not where they belong. They should be at resistance, not coming into support. This one hammers into support, but look where the VPOC is, way up here. This guy's probably getting trapped, right? So the easy way to, first of all, probably don't want to take the setup that we're talking about, the reclaim setup to the short side, right? And the bull there's no dot up here to take out, so we can't reclaim it. So you'll probably either have to wait for a later entry or use a different technique to get in. But that once this X, and it's got an X and a star on it, and we trade above it with a VPOC that's not pink, and we've got another volume anomaly, that's almost always good to go. And that low is in. My guess would be you could probably put your stop down here and like buy calls or whatever anywhere up here, and you're probably good. Let's see. A link to a video that is basically primary. Yeah, no, I know. It's there's so much lingo. I know it's a lot of jargon. You can look through. I've got a bunch of live streams I've done on the algos. Otherwise, if you here, I can show you. Simon, my coach, has some pretty good YouTube videos too. Let me just see if I can find one. So like this is a good example of Oh, how do I get? Okay, so I got to sign in here to the chat. So this is a good example of one that's a little bit more simplistic, I think. But if I can I put yeah. So that's Simon. That's my coach's YouTube. His are a little bit different. His algo is a little bit different. Hold on. Okay, yeah, but it's the same thing. It's just, the colors and stuff are different, and it's simpler. He doesn't have all of the same. I've got extra signals that he doesn't use. He doesn't need. But I'm like I said, I'm extra, so I I make my own and add to it. But a lot of them are on his as well. But let me just see. Does this end up working? I'm just curious. Oh yeah, it totally works. Okay, cool. Cool. Yeah, you're welcome. Thanks for checking it out. Let me see if we get a setup here. No. Here we go. Does this one work? Stops it out. Do we reclaim this VPOC? On a triangle? Yes. Do we make it to resistance? Yes. Works. And then it shuts down. I'm not surprised. It seems to be good for one rotation. But keep in mind, one rotation on this time frame, that's 72 to 92. So that's 20 points on this time frame. Oh, that's right now. Interesting. So this one fired, and then any runners would have stopped. And then there was no dot down here. Oh, good long, by the way, dude. That was a good call. Look at that. That's pretty. So these guys getting stuck down here created a support zone, and they aggressively bought out of that support zone. So on the higher time frame, we see aggressive sellers at the lows getting trapped, and when they came back into them, they weren't able to pass. See the VPOC for this guy, because remember, this might be on a bullish bar, but the wick occurred after this. So the way this went time based is it went up, and then it went down, and then it went a little bit further, and then it ripped, right? So the shorts are stuck in this bar and this bar. This is where they ripped through them, and some of them obviously capitulated. But when they came back in there were still people waiting to buy in that area, possibly to exit their shorts or just to flip, because they identified that this was an area that shorts got stuck. So they got aggressive, buyers absorbed them, and on the return to the area, they defended it, right? So now that we know that, first of all, you know to look for the long on the smaller time frame, but also I can start looking for this setup, because if it does this, it makes sense to look for longs now because I've got shorts trapped below me. So let me put this back to 15 tick. And let's just see if we can, now that we know what the higher time frame is, let's see what we got here. X trapped. So he got trapped. Now in the smaller time frame, they might come back and test in here, but it probably won't put any volume down there. They try to test and they immediately get squeezed. Now you didn't have any indicators here of like an aggressive trader, which is unusual, right? Usually you're going to get something triggering here, but one way or another, the location is right. But we didn't have a blue dot to signal out of, so it didn't set up on this time frame, which is the biggest complaint that I've ever heard of using a systematic process, is that sometimes you're just not going to get set up, right? If you're looking at just this time frame, you might not get a setup, but you may get one on a different time frame. So like if you were working off the 15 tick, but you were also watching the 24 tick, which is what I often do, you'd see that they trapped this X at the low. Whoops, let me just get rid of these lines. They trapped this X at the low with a diamond and then a dot, and they weren't able to even get under that dot, right? So by the time you got here and they're above this X bar, you know he's stuck for sure. It's not just pink bars, it's like real bars with volume shifting higher. So basically, anywhere in that location, in that bar's range, is probably just fine to get long as you have a resistance up here you want to target on a squeeze. And so this you could buy, or even better, the blue dot you could probably buy too. And your target is basically wherever all the volume is up here. It's not necessarily a high, but like here we have a lot of volume here. It's basically right here, right where it got. Interesting. So yeah, that's. I mean, it doesn't mean it's going to stop all of a sudden, but I'm just saying that would be your primary target there. If you did buy this up here, you'd unfortunately have to put your stop like here, 15, 20 points lower. And then if they take it, you'd have to know that they might set up again, like down here on this blue dot. If they, remember, because if they test below that, I can't seem to get it on the VPOC. If they test below that pink bar with the blue dot and then reclaim the VPOC, it'll be bullish again, right? So even if it comes all the way back, oh, but there's a blue dot here, I guess that might not be totally true. It would be more likely the first one, this one. If they go through this dot and reclaim it, that would potentially give you another entry to go higher, is the idea, anyway. Let's see. This is the 24 tick. We were talking about the X getting trapped, or the stars getting trapped. Here's that exact same setup at 11:30 Central. It's got actually a lot of different signals on it, so all sorts of reasons to pay attention to this bar. And they get above it with a VPOC right there. And so now this area becomes support that buyers are likely to absorb out of. And so any sign of strength from here is a good place to buy. So you could buy any of these algos, the blue dots, the diamonds, any of that is good to go. And then let's see, did you get any of the blue dots stopped out? Not really. Just this one, but only by a wick. And then you'd have to reclaim this on a triangle up, which it didn't really do. So it didn't set up that way. Oh wait, this one. This one got a bar below it. So this triangle up triggers you in. Oh wait, no it doesn't. The VPOC's below it. Darn. Not quite. Not quite. You needed VPOC above it on triangle up, and you didn't. Oh yeah, triangle up. That's the entry. Yeah. So that's your entry either way. For both setups, it gets you long here. That's cool. But notice that you didn't have to get long right when once it closes, it's valid. It's not going to disappear once the bar is closed. So you've got all this time here to get long. It doesn't have to be immediately, but you have to wait for the bar to close before you know that triangle is legit. And then once this bar closes, any of this is good to go. You just have to get it in the range or lower of the bar. You don't want to be going any higher than this, really. But any of this is fair game for an entry. And that's how all the trading perform setups work. You wait for the bar to close. Once it closes, if it's a valid pattern that works in that condition, you can buy anywhere in the bar's range. That's generally the way it works. With bonds, it is slightly different. Slightly different. You have to wait until it goes one tick further for bonds, but other than that, that's how they always work. Okay, I wanted to see if I could find one on the top, and I did right here. So X star at the high, right? Or near the high. The only thing they can put above it is a pink bar, right? And so now that is probably going to get defended, because this caused buyers to get stuck. So when they come back in here, sellers defend it. And remember what I talked about before? This is test number 1, established resistance. Now test number 2, unestablished resistance with a ring, followed by a triangle down. That is an aggressive entry. And then this ring, the range of that ring becomes sellable as well. So if they come back in to this range, the first time you're usually going to get sellers showing up here. We're approaching it literally right now, so we'll have to see if we get it. Cool. Nice trade. Nice trade. Yeah, man. I usually do share my P&L when I'm trading. I haven't traded at all today, but yeah, pretty consistent. I mean, we all have losing days, believe me. And I struggle primarily when I'm not following the system. As long as I can stay focused enough to only take trades when the algo tells me to take them, I do okay. On my quote unquote bad days is when, let's say, I take two stops that were totally on process, part of the program. It just happened to be that they stopped. And then I decide that I'm just going to reverse, even though I don't have a reason to, or something like that. Like basically like revenge trading, tilt, things like that. That's usually how my loss days happen, I'll be honest. But there definitely are days where I come in, have like the wrong direction in mind, get stopped twice in a row, take a break, come back, get stopped again, and I'm done for the day with 3 stops in a row. And they were all on process. That absolutely does happen. But that's why I have a rule that if I take 3 stops in a row, I need to step away because either I'm not in the right state of mind, because it doesn't happen very often. So maybe I'm distracted, tired, not feeling well, whatever, tilted, or the regime is changing, and I need to go back to like the basics and stick with only the highest odds conservative trades for a while until I figure out like what's going on. And as an example, like perhaps I'm not identifying that we're sweeping back and forth between the same support and resistance, and the algo's setting me up in the opposite direction, right into support or right into resistance, and I'm falling for it over and over again because I'm not like watching the chart and looking. I'm not zooming out, right? That would be an example of where I might take 3 stops in a row. But yeah, most of us, once, I will say there's a learning curve, a steep learning curve for executing with any system. If you are a discretionary trader and you're switching to I'm going to wait until my system tells me to do something before I push a button, there is a steep learning curve there. Like with learning to accept that like I can't short until I get this bar to close, for instance, even though you've seen this work hundreds of times and most of the time they come in and they defend this area, and if it starts to roll, it usually drops. The rules say you need a triangle down before you can get in. It doesn't matter what you think is happening. You need the setup. That is what takes a long time. Is adjusting your brain from it's bearish sell impulsively, intuitively, to I don't have a setup, I can't do anything. So Yep. It's the only way, unfortunately. If we were robots, we could probably keep trading all day. But the truth is, as humans, like we get tired, we get distracted, we miss things. And it's not the fact that in this business you can literally give away a year of work in a day. If you're not staying on process, that's one of the reasons why I use a system, is because I don't like, I do fear like blowing up. I don't want to blow up accounts anymore because when I was trading without a real clear process, it was inevitable. It didn't happen all the time, but eventually I'd give back whatever I made in a drawdown, and I didn't have a great way to reel it in and sort of be like, okay, something's not working, because I didn't know what it looked like when it does work. Like I just either had a good day or a bad day, but I didn't know like what's a regular day, So figuring out what the expectancy is when I do everything right really helps me gauge whether or not I'm doing things right. Because if I start the day and, like I said, if I'm down 2 stops in the first hour or something, there's no reason to keep trading. Like I know that's not normal. And so, if I want to leave go do something else, and then the market changes, or I consider looking at a different, like rather than equities, maybe I'm going to look at bonds, or maybe I'm going to try like oil or gold. I'm allowed to do that, but not in the same sitting, because I've had times where I tilt from one chart to the next, like taking 3 stops in a row. Like I've done it, just out of spite. So to keep that from happening, if I take that 3rd stop, like that trading session needs to end. Doesn't mean I can't trade for the entire day, but that session needs to end. I need to like leave my computer, right? Like shut down the broker, shut down the execute the everything, and like if I want to come back, if it's not, if it is the first hour of the day or something, and I want to come back in the afternoon or whatever, I need to start the whole process over again when it comes to my prep, because I have a routine in the morning that I have to go through before I can trade, and that includes like a self analysis basically, where I quickly determine whether how much size I can take based on conditions that my coach helped me build. That will help me trade more when conditions are optimal, and trade less when conditions are suboptimal. Um, so I have to go through that all again if I want to trade after taking the 3rd stop. So, and the other thing is just having those rules and following them. It makes you a more consistent trader automatically, because like the discipline is just built into the system that way. And yeah, I think that's for someone like me who doesn't have the greatest discipline, like normally, the system like kind of gives me boundaries, sort of to play in. I don't have to worry that like, I don't know. It's like as a kid, if you just like go out and play ball like in the middle of the street, chances are you won't get hit by a car, but like there's always that chance that some crazy drunk person could like drive by and like hit everybody. And so like you were taking risk, right? But there's a huge difference between playing ball on a country road and playing ball in a park. The chances of getting run down in a park are much lower than getting run down in a country road. So like I just don't want to trade like the guy who just went out with the ball and kicked the ball around on the country road, because I don't want to have my entire account at risk at all times if I can avoid it, right? I mean, technically it is, but like I want parameters that make that risk like manageable. And I'm not comfortable with the idea that at any time my entire account could just blow because and that would be something that would be normal in the system, right? Like that should be something that's weeded out with like multiple levels of risk management, such as having 3 stops and then being done, and taking an inventory before you decide what size trade you're taking. So like all those things are just to avoid the totally avoidable blow up. And the fact that we aren't required to do that to trade means it's up to us to figure that out. Yep. Yeah. Yeah. That's the thing, is it's like micros to minis it's a big change. It's a big change. I will say it's the hardest shift. Yeah, like the commissions, you're right. Like that is frustrating, but the very hard, like trying to trade one contract is almost impossible, in my opinion. Almost, because you have to be right so often, or you need to know how to target the big swings. Otherwise, yeah, like doing it with one contract is just so tough. So like, in my opinion, you really shouldn't go from micros to minis until you're ready to take 2 contracts and take whatever you're, if you have a rule like I do, like 3 stops and then I'm done for the day, that 3 stops needs to be like a small portion of your like risk per like of your acceptable loss, right? That can't blow out a quarter of your account. Yep. Yep, exactly. That's what I'm saying. That's what I'm saying. That's what I'm saying. Like, you might not think about it when you're riding a bike. You might not think about the risk every day, like, because most of us who ride bikes in our past, we've probably biked a whole lot and gotten to where we're going without getting hit by a car. But that doesn't mean you shouldn't wear a helmet, right? To The only reason is because there's situations that are totally out of your control where you might get thrown from your bike onto the floor and your head hits it. And if you can avoid certain death with like this risk parameter of wearing a helmet, like, why not do it? And yeah, like, it's the same thing with trading. Like, I'm not saying you gotta bike in a bubble or something, but like, at least if you can just build into the system some sort of risk management parameter that literally keeps you from blowing up, at least unless you did it over and over, days and days and days in a row. Yeah, if you have any, assuming you have an edge, which is a big assumption, but assuming you really do have an edge, then blowing up it's not really, the likelihood is way lower. The only way you will blow up then is if you don't follow your process. And so something I've worked on with my coach a lot is when I have emotional attachment to the results of a trade, he helps me realize that, like, rather than being afraid of stopping out, I should be afraid of trading off process. So, yeah, it's if you can shift your fear, because really the reason you don't want to stop out, that fear of like, oh God, I'm going to lose, the fear is actually of like not being able to trade anymore, right? Like, not because if you have edge, then like you should just be able to run your system and recover losses. Like, yeah, I'm not going to say it's simple, but like it should be probable. It's not guaranteed, obviously, because you don't know what's going to happen next, but it should be probable that you recover losses, and you shouldn't be taking losses that you can't recover. That's kind of the like the obvious like truth of it. Is just that if there's a loss that you can't easily recover from just running your system, the reason you're so afraid of it is probably because you're either trading too big of size, or because you don't have the system built to the point where you actually trust that if you just run the system, that the risk of actually losing the ability to trade is low. So our fear, the natural fear, is actually, I don't want to tilt. I don't want to give all this money away that I earned and not run my system. I don't want to disrespect all this work I've done for however long you've been trading, building up your knowledge base and your practice and stuff. I don't want to blow that all on some gamble where I just throw half of my account on a 0 days till expiration option and spin the wheel, right? Like, the fact that we have the freedom to do things like that, like, I could just decide, you know what, this looks short, I'm just going to put 10 contracts on. Like, my broker's not going to stop me from doing that, right? He'll happily take the commissions for that. But I have to have a system that says, hold on, if I do that, even if I win today, even if the results are good today, if that's acceptable, I will not be trading for very much longer. Because then if that's what you want to do, like, if that's really how you want to trade, your goal should be to stop trading as quickly as possible, which may mean deciding how much you're going to win, you're going to risk, and then risking that on one trade and then never trading again. As soon as you lose, stop trading ever again, right? If you're in it because you want to win big, like, then you have no chance of keeping your money, because you don't even have a process that has a goal to keep the money. So it's not about winning or losing a trade, even though our brains want to think that that's what we're afraid of. That's not actually, that's not really logical. Once we've pushed the button, that money that we put on the trade, it's not ours anymore. It's already in the market. And yeah, so you just have to decide, is this a time when I have a probable outcome that if I did this over and over and over again, that I can keep trading? Or is the probable outcome, if I keep doing this over and over again, that I won't be able to keep trading? And then you just have to ask yourself, do I want to continue trading or not? And once you know that, then yeah, like the process just becomes a lot simpler to follow, because every time you catch yourself thinking like, fuck, this might stop out, you remember, oh yeah, like stops do happen in this system, and that doesn't mean I'm doing anything wrong. The only thing that means I'm doing something wrong is if I'm not following my rules. So am I following my rules with this trade? Is it a valid trade? Am I trading on process, or am I tilting? And if you don't know the answer to that question, step away and do the inventory again and start your session over, right? But if you know you're on process and you see the trade entry and you know it's valid to the best of your knowledge, and you also know that the expectancy of that is like, 63% of the time or whatever, I'm going to make 20 points, and like the rest of the time I'm probably going to lose 16 points. Like, don't be afraid of the results. Be afraid of pushing the button at the wrong time. Yeah. 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 Yeah, no, unfortunately I know a guy who got hit on the way to work and permanently disabled. I mean, you don't think about it, but we face real risk every single day. So, but yeah, I totally agree with you that the key phrase really is, if you have an edge. And the funny thing about edge is that, like, usually once you find something, like a lot of people like to say that, like, don't tell anybody what your edge is, because if everybody does it, then it's not going to be an edge anymore. That might be true for some markets, but if you're trading like ES or NQ, like you're not going to move that market, right? And if it's a real edge that's consistent on multiple time frames, chances are that edge isn't going anywhere. The expectancy will change, right? You're not going to have a consistent 60% win rate or something. Sometimes it's going to be down to 45, and sometimes it's going to be up to 75, right? And if you keep working at it, you can probably figure out which conditions to not take that setup, so avoid the 45%, and which times to take twice the size because you probably have a 75% chance, right? Like, that is possible. But what people don't realize is, like I said, they get stuck on thinking like, I need the best setup. And the truth is, you don't need some sort of unique best setup that only works today. Like, if you have something, it's just a question that works over and over again. It's just a question of, can you wait for it? Because it might not set up today on this market, right? I might miss it. I might sleep and then it comes up, right? So how I get around that is I have a handful of setups that I've practiced one at a time that I build, and I start out just like I did with this one, where I do the back testing. I figure out if it's even a pattern that I want to like look into, see that it works whatever percentage of the time, right? Take some notes on it, go to some random days and random different time frames, see if it works the same, does it change? Maybe try to find a trend day, maybe try to find a really choppy, like trappy day. See, it's not going to work every single day, but it should work most of the time. And then figure out, when should I stop taking this? That's a really important question to answer before you go live. But eventually, once you've got that edge identified with paper trading or whatever, the next step, what I do next is I get these Apex Funding trading evaluations, which is like a prop trading firm, and they're always on sale, not always, but often. And so like, you don't risk, in my opinion, I'm not risking a whole lot to take the evaluation. And I basically just get the evaluation. I like, the number is associated with a trade setup, and if that trade setup comes up, I hit the button for that evaluation on the DOM, right? And it might take me a while to build that account or to blow it up, But one way or another, the good news is I'm spending like $40 or whatever to have a real life experience of actually trading that trade, pushing the button, having some sort of consequence to it that at least feels kind of real, because you know that if you qualify it, you do get to trade real money, right? But if you blow it up, the worst case scenario, you would lose the $40 or whatever. And so the point of that is not necessarily to, get 20 Apex accounts in a week and become a millionaire. It's figure out which one of these trades are working and when do they not work. So that way, when you do blow up an account, you're blowing it up when it's an evaluation. And then once you, some of them, if you do find something with edge, some of those evaluations are going to pass because you're going to keep doing that same trade setup with that same evaluation. So I'd assume that eventually you get at least one to pass. And then what I need to do is I pay $250 up front, and the PA's the performance account at Apex is then no longer costing me any money for the lifetime of the account. And then I only trade the setups in that account that I've actually taken through this whole process and earned performance accounts with. So I know that if I just take that trade and that trade only, or in this case it happens to be like a basket of trades, that I would do okay. Oh, there's the short if I get a triangle here. Here it would trigger at 60.25, and then we could take it anywhere all the way back to 79 or whatever if it triggers. So I could just get in immediately at 60.25. Here, I'll show you how I would do this. Let's put it in here. 60.25. So this one's going to go in an evaluation because it's not a established setup yet, right? It's a new idea that I've seen work. I know when it doesn't work, and I know when it does work, but I haven't forward tested for long enough to trust it yet with real money, but it should work, right? And so it's good. I can take it with two contracts with the evaluation account, and it will automatically become like a ledger for me to say whether or not that trade is working. So yeah, let's see if I catch up with you here. It definitely helps you develop discipline. No question. No question about that. Yeah, I will say when I take a big trade and it works so well, it is a very natural reaction to immediately want to get into another trade, and usually the solution to that is actually to step away. And especially if you did way better than you expected, like if your average winning is like $400, let's say with, I don't know, I don't remember how many micros you said you trade, but if you trade like 6 micros, you probably make like $200-300 on a really good trade. Like if you made 500 on this trade, like what I do is I decide how much I'm willing to risk of that before I shut it down for the day. So let's say I made 500, I normally make 300, and so therefore I'm willing to risk 200 as long as it's on another good setup. But if and so maybe I can take 2 more trades, let's say. But if those both fail and I lose those $200, I give back those $200. I'm just done because I've already hit a high watermark that's higher than my average. And so at that point, if I'm doing everything right and I'm getting stopped at that point, I'm probably tired or maybe distracted or euphoric, about because of being in the trade that worked. So it's just the last thing you want to do, like I said, is put yourself in a condition where you're at risk of tilting, right? So if you know that if you go plus 500 to minus 300, that the likelihood of you tilting and giving away another 300 is 200 times more, then you just need to make a rule that that's not allowed. because if you managed a group of traders and you caught them doing that, if you would fire them, then that means you need a rule to keep that from happening. That's a very easy way to decide whether or not you should have a rule for that or not. imagine you manage money and you had a trader and you see he has that P&L and you're like, dude, what happened? And he literally tells you exactly what you did. And your first reaction is like, dude, get the fuck out of here. Why are you even here? Like, then you need to stop doing that. And the only way to do that, because it's not sound decision making. So the only way to really do that is to make a rule and convince yourself that the rule is not there to stifle you. It's there to protect your earnings, right? To protect your process, and to respect yourself, right? And like to respect that process to the best of your ability. Obviously, no one's perfect. I break rules all the time. But the key is to have it there so that when you do break it, you know right away it's unacceptable and you can use it. Like I said, in my inventory, one of the very first questions is, what was your P&L during your last session? What's your P&L during your last session? What's your P&L for your average session? And then I do math to determine, and the lower it is compared to what my average session is, the lower my size is, so that because my impulse, if I have a losing day, is I'm going to make that money back. I'm going to get it back from the market, right? So if I'm down 300 or whatever, my number one goal is just get back to break even. That is not the way it works, unfortunately. You don't get to pick where the stops happen and where the wins happen and what order they come in. We don't get to decide that in trading. So instead, if I catch myself being like, I need to get back to break even, I need to drop size to the point where if I took a winning trade, it's not going to get me back to break even. That's actually counterproductive long term, believe it or not. I currently trade on Apex with two PA accounts, and then I cycle through like a multitude of. I usually get maybe like 4 every time they have a sale, and with the intention of blowing them up, basically, trying out new setups. And yeah, so this last time I got 3 because I started doing this in February. So in February is when I first passed them. I mean, and those were purchased I think like January, or maybe it was the Christmas sale is where I got those ones that qualified. And so since then, I want to have at least like 4 accounts so that I have like 2 that can practice and the 2 that are like real. But then I also have a cash account that I trade through Sierra. But I don't use that very much, honestly, anymore. It used to be the only thing I had. But the problem with the cash account is that if something technical goes on, whatever you have in that account, you can lose. And it happened to me, unfortunately. I was stuck in a trade. I had a stop, and the stop didn't happen. Like the market went through my stop, and it did not execute. And the broker explained that the problem was through the routing system, because I use a CQG as a router, through the broker the cash broker that I was with. And basically, yeah, like he said, you're still in the trade, and once CQG comes back on, we can get you out of it. But until then, like, you're stuck in it, and whatever happens. I had a risk on that. Like if it would have just stopped out, I had a risk on that about $350. I lost 5,000 something on that trade. I don't remember exactly how much. It was by far the biggest loss that I had taken in my trading career. It was literally, and like I said, it should have been like I don't know what it was, 300, 350 loss, but the trade didn't trigger it. Then the day closed and I was still stuck in this trade because CQG was down until about 2 a.m. And then, and we had a big drop overnight. And once it came back, they executed it as a market order, and it took me out at a 5,000 some dollar loss, only to watch the market come all the way back to my entry, around like 10 o'clock in the morning. Thankfully I did not trade that day after that. I knew better, but it was, I I was moving the next day, which sucked even more. So I literally was like, it was so bad. It was so frustrating. But after that happened, I realized like, oh my god, like literally, I can lose everything in my account, even if I do everything right. And that spooked me enough that I decided to pull out most of the money from that account and trade smaller first of all. And then anytime I made money, I would just take a withdrawal so that it wasn't sitting there because I realized that like it could just be gone, you know. Uh, but technically, you can actually lose more than what's in your account too. So that doesn't even solve things. If it's like down for days, like you're liable for it, even if it's not in the account. They can garnish wages. They can take your property. Like you got to know that like futures are the real deal. So yeah, that risk pushed me to it did two things for me. It was probably the worst trading day of my ever, but it because it was like so frustrating that it was out of my control. But it made me realize that the money in my account is not my money until I pull it out of there, and that's when I was like, you know what, like doing something like a prop trading firm is probably the only way I'm ever going to scale because I continued to trade micros for a while after that just with a very small account. Um, Thinking that like with a small account I won't be in it for I'll only be trading like 4 micros or whatever, 6 micros. So like the chances that I'll have a huge down day is pretty low. The market would have to move extremely big, and I would have to get stuck in a trade for me to like lose more than what's in the account. But anytime I'd make money, I'd pull money out so that I didn't want to lose anything more than 5 grand, you know. So yeah, yeah, right, exactly, right, yeah. The you'll get a new NT8 license for Apex. Like yeah, it comes if you want to do it through Ninja, which I do. I do the Rhythmic Ninja. You can also Tradeovate. But if you do Tradeovate, you can do it through TradingView too. And I think they have like a mobile app, which honestly I don't know if that's a great idea to trade on your phone with futures, but if you wanted to, they can do it. But yeah, I use the Rhythmic for the what's it called, Apex. I go Rhythmic to Ninja so that I can because I want to be able to use the trade copier um, on the PA accounts so that when I get a trade that I know is valid and I can take it with real money, that I don't have to push like buttons on like multiple DOMs. I can just push the like limit buy or whatever on Ninja and have it set up to automatically copy the trade from one PA to the other PA. So and then that way, if I like qualify another 3 of these or whatever, like I don't have to do anything different or even take more risk. I just keep doing what I'm doing, and the trade copier just like copies over my trade entries and exits automatically in the brackets and stuff. So that way I don't have to do anything different, but I just make more, right? And so that way, what's cool about doing it that way, you can have up to 20 PA accounts, which is a lot. And like that way you could spread the risk out, and the chances of blowing those then is very small, but you could still make a decent income. Because like, let's say with like if I trade 8 micros maybe, like I'm normally pulling in 350 probably would be like an average day with 8 micros, but my max loss on the account might be like 5K, let's say, for the 150K. At least until you make 5K. You can only lose 5K of their money, basically. Is how it works, more or less. So you would normally only be able, like if you wanted to size up with one account, you would have to take more risk on every trade, and your chances of blowing that up and losing the account is higher. But instead, if you just get another account and keep trading 8 micros, you won't risk any more, right? Because you've got the 2 different accounts. Like you won't. I shouldn't say you won't risk more. You will, but it won't. It won't threaten your like doubling your drawdown like speed, right? The trailing drawdown won't be a problem because you can up your size just by having, you can double your size just by having another account without having any added risk of hitting the drawdown. It's pretty cool. Yeah. Yeah. Wow. Damn. That's awful. Oh, I got filled. Okay. Let's see if it. So let me make sure it's still valid. We have the O. We rejected it. We got VPOC shift, which is orange, followed by triangle down, which means continued aggression. So my stop needs to go up here above this at like 80.50, let's say, is really where it belongs. So basically high day. It can basically go to high day, maybe a tick or two above that. And if it's bearish, I will take profit. So that entry was like 60, let's say. So it's a 20-point stop, give or take. So I want to make sure, like, I'd have to think that I could get 20 points on this to make that make sense. That's important to understand. That if you're going to take a 20-point stop on it, or I mean, if you're going to take a 20-point risk, you better have a way to get 20 points. Well, I do, right? I can target down here and then hold, and then I got it with 2 minis so that I can take I can take profit off when we come into like I usually maybe around like 12 points or so. I'll take my first one off and then I'll leave the runner as long as I can, basically. Yep. It's not actually a check. It comes through. It's direct deposited to my. Well, yeah. Once it's not like automatically, but it's direct to deposit to my bank account, which is kind of neat through like a system called Deal. I think it's what it's called. I forget exactly what the name is. It's some online system. It's very easy, but you just like prove your identity, set up a thing for like know your customer. And then you have to make a request, and you can do it 2 times a month. You have to do a request. You need to make, I think it's at least there's an amount. I forget what the limits are exactly. But what I do is if I make $2,000, I pull out $1,000. It doesn't cost anything to take withdrawals. It's all free processing and stuff. So I just take $1,000 every time I make 2, and so it which is not necessarily twice a month. Like there are, because first of all I don't trade every day, and there there are red days, so sometimes you're not gonna have, you won't hit your profit target in those 15 days, but yeah, I have been able to get one, thankfully. So I know it works. In fact, 2. I've had 2 of them. Let's see. Interesting. Stock's now trading some firms and Tesla a bit down here. Yeah, okay. Yeah, that makes sense. Let's see. What else can I share while we wait to see if this works? Here, let's just double check and see what this looks like on the smaller time frames. I mean, I'm already in the trade, so it doesn't really matter, but I just want to see and find out if I've got, so if this gets reclaimed, it's probably bullish, right? So truthfully, I can probably move my stop a little bit lower, because if they reclaim this on a triangle up, it's probably, oops, I drew that wrong. It's not going to come back. If they reclaim it on a triangle up, it's going to go higher. So technically, because of this dot getting stopped out and this new setup I have, I could probably actually put the stop at like 75, and most likely, if it hits that, it would have triggered the bull trade, in which case I shouldn't be short. Now I don't have to immediately get out, but at that point I would know, like, any opportunity to get out of the trade, I should probably do it. Yeah. Yep. Yeah. Oh, wow, it's getting late. I didn't realize. When I looked at that, I was like, oh shit, it is. It's 4 a.m. I guess I shouldn't stay up much longer. This has already been going for 2 hours now. Let's see if this can at least hit a profit target or a stop, and then I'll shut it down so I can get some rest before they open. But yeah, I think if it gets up here, it's not going to work. It doesn't mean it has to go much higher, but chances that it just goes straight down, if it doesn't find resistance around 70, 75, it's probably not ready. But that aggressive trader is this star here is a little misplaced. You want to see these at resistance, so that gives me a little bit of pause. It's not enough to like make me bail on the trade or anything, but you have to ask yourself, why did they need to aggressively push here? Now there might be a reason. I have a voodoo range level there. Is there? There was a previous little swing low there. A couple of them. So maybe it's just new resistance. But it does seem a little bit odd to get the aggressive trader firing here when like there's nothing there's no reason why you should have to get aggressive there or push that lower. And like I said, it would be normal to see him up here, but that one didn't get the aggressive trader, so that it's just a little abnormal. Doesn't mean it's not going to work. It's just not how I would expect it to look. But I don't have any like evidence that means that the trade's not going to work. But when it doesn't work, the times when it doesn't work, you could look back and say like, well, how often, if you could see like, does it set up like this a lot and then not work? And then maybe you could have another process in that setup to be, do I have a star down at support, right? So you could build it into your setup if it becomes a problem. But it's one of those things where it's like, how often does it set up just like this? I don't know. You'd literally have to go back and look it up, right? You'd have to do the work, like the legwork of looking for the setup and then seeing what happens when it occurs like this. But I'll tell you what, it's a lot easier to do that with the algo than it is to do that with this. It's a whole lot harder to try to figure out when does this occur here and not here. Like, I don't know. That'd be pretty tough. That'd be pretty tough. But when I have the star there, it's like, okay, I can see stars. Like, I know what stars look like. But if I'm trying to figure out that price action and I don't have the star, I'm like, I'd have to look for this pattern. And yeah, it's a lot harder to identify without the algo. So the algo means that it objectifies things. Everything's objective. And I don't have to ask, is there an aggressive seller there? Is he aggressive enough? Does it count, right? Like, it's already programmed into it. Like, you have to draw the line somewhere for when a condition is met or not. And that's just where we draw the line, is whatever you make the signal. So, cool. Awesome. Yeah. This is in an eval. I took this one in an eval because it's a new idea. So it's technically a paper trade, but it's in the eval. So I mean it counts for something, but it's not a real money trade, because it's a newer idea, which are these rings. Where was it? 24 tick. The rings here, I'm finding when you come back to them and reject, it tends to be resistance. But what I don't have like perfectly figured out quite yet is like, is the execution just getting a triangle, or are there other conditions that I should look for to make it more optimal? I don't actually know that yet. All I know is that usually you get some kind of drop here. But there may be situations where I should avoid it. And the only way to do that, to know what those are to like basically to take them all, or at least to study them all, and to look for, when it doesn't work, to look at it and just be like, does this one look any different than the last 10 of them set up this way? and then all of a sudden, it's sometimes good news when it stops out for your long term, because when it works, it's like, okay, well, that's what I expected to happen. I don't get any new information. But when they stop, it gives me another one to study and to say, like, is there a reason for this, or is it just random noise? Because there's definitely random noise. Sometimes there's no reason at all, and there's just no way to optimize it, right? It's just a stop. But other times, if you go back to it and you're like, let's look at all the stops, and you're like, oh yeah, that's right. This is how that one's set up. And then if the next 3 stops, I find that the smaller time frame has a star down here, it's like, oh, well, I should just see how I do if I don't take them when the star shows up. Or maybe it's the dot or whatever, you know what I mean? Like you look for patterns. And it might take you a while, but eventually you'll optimize something to the point where like your edge gets good enough that you can pretty much take it every time it sets up. And they're not all going to win, but enough of them are that you'll have positive expectancy. That's what you need. And that's what I need to take them with the real money account, is that sense that I know when it's optimal and I know when it's not. So for those setups, I'm willing to take it with the real money account. But if it's like this, where it's like, I know this is a pattern, but I don't know enough about it to know when it works and when it doesn't. But I definitely see it a lot. Yeah, exactly. The unemployment data is gonna mess with stuff, and the open's gonna be messy because of it, regardless of what the results are. And I don't trade during econ releases. Like, I'll let the dust settle, and once I can, like, things go so fast, you can't even see the 15 tick move. Like, it's just like boom, 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 boom. You can't process anything. So I just wait until all that's done, and then analyze, like, who's in control, where's my support, where's my resistance, which way do I think it's going. Okay, now let's wait for a setup in that direction, and then wait. And then if it happens, hit the button, and if it doesn't, you don't. It doesn't sound exciting, and unfortunately it isn't. It's not that exciting. It's just, the exciting part, in my opinion, is finding new setups and testing them and stuff. That's the exciting part. Because when you find something that's going to work over and over again, like, that's got, like, the real expectations, the actual, like, pushing the button, like, I'll be honest, it's not that much of a thrill. Yeah, I've removed a lot of the thrill of trading by systematizing. It's not that I don't like doing it. I love trading, but I'm not, like, I don't know. The emotional approach is different. When I was just discretionarily trying to decide what I should do, I had a lot bigger emotional swings, and they were related to the results. If something would work, I'd be elated. If something wouldn't work, I'd be bummed. And then when I was in the trade, if it looked like it wasn't going to work, I'd be anxious and frustrated. And then when it looks like it was working, I'd be, like, euphoric. And the more systematized I got, the it's not that the emotions just disappeared, but, like, the severity in both directions decreased. And the result of it is that, like, I can take a stop even with the real money account, and my only question is, like, I might be disappointed, but the only question is going to be, all right, was that a valid setup, or did I misread this? And if it's a valid setup, it's like, okay, next trade, and if you can't do that, you probably need to take a break and reset, but same goes for winning trades.
I am totally susceptible to getting super high off of like what is it, like endorphins or whatever, from like seeing, you know, a 4-digit P&L develop over like a trade or two. Like, I'm definitely susceptible to that. But it used to literally be every trade was like was like a roller coaster of emotions, and now it's not barely as exciting. It's just, here's the setup. Let's see if it works. All right, so are they gonna trigger? No, they do not have. Let me move my stop back to 80. They don't have the bars in the right place for this to trigger long, because we've already gotten the triangle and the bar above it, and we did not get above the VPOC on the blue dot. So that setup cannot trigger long here. So my stop is at high day, or above a tick or two above higher day. I'm not gonna exit the trade early, because we're not setting up long, right? Had we broken above, like if we didn't put this bar in, but instead we came down and then immediately lifted, and this triangle was a little bit higher, and we printed another bar after the triangle, and that bar was up here, I'd be like, you know what, this is bullish. I'm just gonna exit on the next down bar, you know. But when they can't set it up long, I have no reason to have my stop anywhere but up here, because technically it can come all the way back and still roll over. And I took the trade at the most, where was it? Here. I took the trade here at like the most, oh wait, actually it was on the 24 tick. I took the trade here. I guess it's not the worst place to get in, but it wasn't the best. That's what I'm trying to say. I got in aggressively right when the bar closed, in case it was just going to go boom, right? But a lot of times it retraces first, so you don't have to get in right there. But realize that if you don't get in right there and they go boom, you miss it. So I will take at least one contract, if not two here, and then if I really like the trade, as it comes back towards my stop, I will add to it. But in this case, I just took two contracts, and we'll see if it works or it doesn't, primarily because it's a paper trading account. I just don't care that much. And I don't have any reason to think that this is some like perfect setup. So I'm not gonna put like 8 contracts on it or something. But if it comes close enough to your stop, you can add contracts without adding a lot of risk. Like if my stop is at 80, and I get 2 here, and then 2 at like 75, like I might have four contracts on, but my max risk has only increased by 5 points times my add. So 10. If I added 2 here, I've added 10 points of risk, right? So $200 more of risk. So if I initially was willing to take 3, but only took 2, and they come back all the way close to my stop, and I'm only going to risk another 5 to 10 points to add to my trade, I could actually still stay within my risk parameters and add to the trade way back there, as long as my stop can stay in the same spot. That's the thing, though. There's no moving stops. That's not allowed. In this system, we don't move stops. It's not a thing. You can move them to where they go, but then you don't mess with it. The only situation that might change that is, like I said, when it triggers the other direction. But then you're not moving your stop. The trade is just invalidated, right? That's different than moving your stop. When I'm talking about moving a stop is like you put it here and then it starts to approach and it's like, you know what? I guess I should probably give it a little more room. That's not allowed, right? Or I don't think this is going to work, so I'm just going to get out of it. That's not allowed. Or I got in here, I got 10 points,
I wanted to take profit here, but I've still got runners, so I'll just move my stop to break even and see what happens. Nope, not allowed. Not until you take profits. The way my coach teaches it, we don't move the stop until the trade is paid for. Yep. Interesting. Cool. Nice. That's neat. Yeah, monthly VWAP is VPOC is definitely something to watch. No question about it. Absolutely is important. I mean, if you think about it, it's where the majority of the volume, most of the contracts were traded over the last entire month, right? So now it's not a mean though. It's the median, right? It's I believe, it's the level with the most. It's not like a volume weighted average price. It's just the spot with the most contracts. So, not median. That's not right. I forget what it's. Maybe mean is right. But I think mean is just the numbers divided by how many there are to get the average. So it's, yeah, I don't think that's how the calculation works, but one way or another, it's still important. It doesn't matter how you do the calculation. You can look it up if you want. So interestingly, they're getting this plus sign here typically means that this low is going to get defended. It doesn't mean it can't break, but it would be very bearish now to just drop here. It would make me want to move my target lower if they don't produce another bull bar. What usually happens when there's a plus here is they pull back, produce another bull bar, maybe two, and then it rolls over or it goes higher. But if they can't produce a bull bar after this plus, if this just drops through support, that is super bearish. And in that case, yeah, like if you were trying to decide, like, should I be taking some profits here? Like, you don't have to if they just go bear, 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 bear here. Because that shouldn't happen. Wow. Yeah, exactly. 24 billion. That's a lot of contracts. I mean, yeah, someone had some business to do, right? And now that's gonna take some time for the market to sort of auction around that. One thing that's kind of fun, you can look at the bigger time frame. So like this is the 80 tick. Let me put it on this. Wait, no. Oops, that's not what I wanted to do. Yes, there we go. And then let me get rid of the green. Hold on. Where is that? This one. We don't need all these. So this can change. That should significantly decrease them. There we go. So even on the big time frame, we have the same exact rules still apply. So like you could take all the trades exactly the same way on this big time frame. So like for instance, this is probably resistance, right? And if we trade over it and then retake this, it can go lower. But then the opposite of that is here. It's probably resistance. But if we go over that and now that we've taken it out, if we come and reclaim that, it could get a lot more bullish. So all of those things work on this time frame too. This little yellow box there,
often means that this high is going to be rejected. That's the normal trade. Let me see if I can find another one. See, they're blue and yellow boxes, and usually the lower high, the low, or the for the blue it's the lows, for the yellow it's the high. Gets defended on the next test here. Yellow box, high, defended, and you get that. Now it doesn't look like much, but that is 06 to 55. That's 50 points. And sometimes it's more than that. They're not going to show up very much in the high time frame, unfortunately. But like the trap trades are going to work awesome. Let me see if I can find a trapped X or trapped star. This guy's eventually gets trapped, but it's better when they're like one of the, like the top or the second one from the top. That's going the correct direction. Here, this X gets trapped right here. VPOC above it, right? Yellow line gets above it on a bar that's not pink. This whole thing now becomes support. Bounce out of there with a star, aggressive trader, and it's higher. It's the same exact thing. Star at the top, right? So all the way up to there. They trap them right there. Bar that's not purple with the VPOC below it. Come back in. They absorb. They should sell out of there the first time. Sell. Where does it go? Right back to this support zone. Should you buy it? The second time, it's never as good. Can you get something out of it? Yeah, but it's not going to change the trend. See that? Okay, so here's another one. This was the low. They could only get a purple bar below it. So the only reason price even went lower is because buyers pulled their orders off the order book and someone like chased that illiquidity, but no real volume got put in down here. Look what happens. Squeeze. Where to? Right back to where the trap buyer was before. And they trap another one. Oh, they don't trap them this time. They blow right through it. They didn't get under him with the VPOC. But look at that. I mean, that's an insane move. And it was telegraphed on this time frame. That was an insane move. Okay, let me see if I can find another trap, because they work really nice. So here, there's no aggressive down bars here other than the triangle. There's really nobody to trap down here yet. We haven't had any sellers get super aggressive on this time frame. It doesn't mean it can't go higher, but it basically means on the bigger time frame, chances are it's not going to go straight up. If it does go up, it'll probably get stuck somewhere around 13,100, or maybe in this wick here. The big wick, or I guess this is probably resistance too. But yeah, if there's a really big wick in the range, like here and here, that's a really good place to look. Because if you think about it, that area was contested when we went through it. It was contested here. So if it was contested, it's probably important, right? So if you want, you could say, well, if that's the contested area, if we're lower than that, it's probably bearish. But if we can blow through that, it's probably bullish. And then maybe buy a pullback, right? That'd be a very simplistic way to think about it. Oh, let me get rid of that. Let me get rid of the lines there. So, yeah, it's useful sometimes to look at the smaller time frame too. Mode is most at a price, mean is average. Yeah, thanks. That's what I thought. So mode is correct. That's what I thought it was. Thanks for confirming that I remembered that correctly. So in that case, VPOC's a mode then. Not a median, a mode. Yeah, I was like, wait, median is like the natural middle. Or the one with the, yeah. It's a mode, I believe, is how the VPOC is calculated. Because it's the price with the most contracts, not the average price. one fun way to do this is to actually draw the volume profile over an area that's like sweeping. So we don't really have one here. Oh, you could do it right here. Here. So if you thought this might be consolidation, you could draw where the volume profile is, and they'll put a VPOC there. So it doesn't mean buy above, short below, but basically if you think it's bearish, they should defend this, right? And if you think it's bullish and they get over it, they should show up when they come back to it. It's not good enough just to, that's not a huge edge for like, you need to have like a target and a stop and all that stuff. But in general, you want to be trading on the correct side of VPOC. Particularly when you are trading in a range like this, like consolidating. And like I said, you can do that on any time frame. So if I go up to the 80 tick, this is all consolidation here. So that VPOC, that pink line, is here, right? So you really don't want to be long unless your target is 13,080. You don't really want to be long until we break that, or we shift volume lower and then trap them. But on this time frame, you don't want to be long until we get above that. Now, on a smaller time frame, that's going to be different, right? If I go to, like I said, 15 tick here, if I go to 24 tick and I'm like, you know what, this all looks like consolidation to me from like way back here, right? Well, on this time frame, then once you got over that and retested it, like you could probably long it, or wait until they come back and try to test it and fail to get under it. That's probably a good place to long. When they do give it up, if they would have come back and rejected it, that's probably bearish. Well, in this case, we went above it, but we haven't come back to test it yet, right? So it couldn't come back, test it, and bounce. Yes. By that point, I will already have paid for the risk on this trade, right? Half of my trade will be out if we get here. So I personally, with the time frame I'm trading, that's a fine place to exit, right? Because my risk on this trade, if you recall, is I think I said 20 points, something like that. And from 60 to 40, that's 20 points. So that would be 1-to-1 to get back there, right? So it's a natural target, though. It's going to act like a magnet. So if I'm bearish, if they do this and this, it's not bearish anymore. That's an important understanding. So see how this is showing a blue dot here? It's not yet validated until the bar closes. It's just warning me that the conditions for the blue dot have been met, but the algo doesn't know where the bar is going to close. It's not anticipating whether or not it's going to be bullish or bearish. So I know that the conditions for that blue dot include that it has to be a bullish bar. Well, for it to be a bullish bar, it needs to trade to 13,073 before it trades below whatever the number here on this dash line is. I can't see it right now, but 54.75 or something. It would have to trade up here first. I can see that's probably not going to happen. It's probably going to close bearish. And then that blue dot is not going to be there anymore. So you can't make trade decisions on a bar until you see the bar close, because the algo is going to warn me about the fact the condition has been met, but I know that that's going to change. Like this being green, the moment that closes bearish, that's going to flip. It's not even going to look like this. You know, like the entire bar will look different. Watch. The open will be all the way down here. Assuming it closes bearish, it's gonna change into like an orange bar suddenly, I believe. Yeah. So see how that dot is gone, the green is gone, and it's filled it in orange? Well, now it's closed, so now that's not going to change, right? Like this one never changed. Well, once it's printed, it's printed. But before it prints, like right now, this triangle, that's not confirmed until it closes bearish at 48.50. If it goes to 66.75 first, that triangle is going to disappear. So it's there to warn us so that if we have a setup that triggers on the triangle, we're ready for it, right? But we all know that the condition assumes that the bar is closed. But we have it showing up early so we can be ready when the bar closes. We know we not exactly, but we know we have a hint of what conditions have been there while it's still auctioning back and forth. And so like here, this star can disappear, right? But once it hits 13.050, if the star is still there, it's not going to disappear. But we have it showing up there early, not by mistake, but because we might have a trade setup that triggers on the star. So then I can put my stop order at 13.049, and I know that when it closes bearish, that star, it should be there. Now, if it warns about it and then it closes and you trigger your order and then you look and the star actually didn't validate, you immediately scratch the trade because it's not valid, right? But the moment it closes, you know what that bar looks like. That's the way it's going to look. So that's an important aspect. The little dots, these can technically move back, but they afterwards they can shift if depending on like what volume does, but it's very rare and it'll only happen immediately after we close. So all the rest of them, it's the close. The dot needs, it assumes certain things are going to continue to happen, but sometimes they don't continue to happen. Usually, for a dot to disappear, you'd have to close the bar and then right here have like econ open or something and have like a crazy flood of volume all to one direction. If that happens in the beginning of the next bar, the dot could technically disappear. But it's a rare occurrence, and it's only while the very next bar is printing. So once you get the dot and you get a bar closed beyond it, you know that dot's not moving. But like I said, worst case scenario, the dot would just shift to here.
From job.com.
Oh, Alexa, go home. I didn't even say her name. Okay. She's funny. It is kind of ironic that I'm talking about making money and trading and she wants to take me to jobs.com though. That is kind of ironic. It's like, of all the things I need right now, jobs.com is not one of them. Yeah. But 5 got, okay, and 5 got over 97. Yeah. Okay, cool. Thanks, Mr. K-Man. That's, yeah. Good example. Okay, that's what I remembered. That's what I thought. That's what I thought. So if I take this volume profile that I drew and I change the settings so that you can actually see it. What you'll see is that the VPOC here, where most of the volume was traded, it's not the only high volume area. See, this also had a lot of volume, and this also had a lot of volume.
what we really want to do is identify. Now the algo is doing this for me. I don't have to think about it. But if you don't have the algo, you need to identify where these low volume nodes are. These little holes in the profile. Because getting beyond those, let's take a little profit, huh? This is working out. Let's see if I can get filled at 51. Hold on. Let me just make sure I get filled here. Because I just realized I'm up 12 points and I should be taking one off. And then we'll leave the other one. Do I have to go to 51.25? Come on. Nah. We'll just leave it at 51. Fill me. There's 10 in front of me. One contract, you guys. One contract. Isn't it always like right there? Isn't that funny how this seems, it always feels like they get so close to filling me and then turn around only to come back and sweep through it, right? But it literally touched my level but didn't fill me yet. And there were still 10 people in front of me apparently. Oh, come on now. I don't, like I said, I'm not afraid that it's going to just suddenly reverse, but it could, right? Like, it's possible. I just want to make sure that I'm paying for the risk. Because I've got a 20-point risk on for 2 contracts. I mean, no, it's an evaluation, so it's not real money. But I would prefer that I got half of that trade out, so that first of all I decrease the leverage, so I decrease my risk from really what's 40. It's 40 point of risk to 20 points of risk. So now then the most I could lose would be $400, but it also means I've locked in 12 points. So I'll actually not lose 400. I'll lose half of that. Right? So all of a sudden I go from a full stop, which would be a $400 stop, or that's not right. $800 loss to like a $200 loss. And then I can comfortably and confidently hold that runner as long as I can. Right? All I need to do is make sure that I just don't want to be over committed to it, like going 50 points lower, and then see it rally all the way back through my entry and hit my stop. That's pretty frustrating. Right? So I would prefer that half of my trade was paid for. And so I'd like them to come back to 50 and 51 actually, and fill that, and then I can relax. I lost my train of thought anyway, but I was talking about the low volume nodes. Yeah. It should fill. There's no change in momentum. There's no reason to think it won't. It's not, just because my level's there doesn't mean that like anybody's like hunting out. That's not a real thing. Like if it's bearish, it's gonna hit it. It just might not do it on that first push. But honestly, now that it's already touched 51, I could probably go to like 48. But I'm not gonna play games. But truth be told, it's gonna go through 51. Now that it's stopped there, the likelihood is it'll go through 51. But we'll see. If it is gonna bounce a bit, it's gonna come back to here. This general area, this high volume node here. But we have this low volume node and this low volume node below us. Uh-oh. Did I lose internet? Looks like it's back. I might have lost internet. Yeah, to get through 2 low volume nodes, we're gonna need some momentum. So there's really no reason to be nervous with 2 low volume nodes between you and the VPOC of this move. So, no, there's no risk and there's no limit on how much money you can make. Nope. in any period of time, you can make as much as you want. You get to keep your first 25K 100%, and then after you make the first 25K, every dollar after that, you keep 90% of every dollar after that. But you do get to keep 100% of your 25K first 25K no matter how long it takes you to make it. But there's no like requirement or whatever. If you want a coupon code, I have one. If you don't have one, let me know. Happy to share that. Here, I'll put it on here. So I think I can probably put a link here. So that's a link to the, let's see here. I gotta put it in the right place. This is the link to the site. And then to get the 50%, the 80, right now they're running an 80% off thing till next week, I think it is. They do them all the time. So don't ever pay 100% for it. It'll probably go on, it'll probably get extended. So it's probably going to go for like 2 weeks. You can get 80% off. So you can get a 150K account for like $60 rather than like 250 or something like that. Like if you made 50K real in a week, yes, that's certainly allowed. Will they let you take your full 80% if you choose to do that on such a week of gains? No, there is a limit for how much you can there's a limit for how much you can withdraw. So, okay, I got filled, by the way, on my half. There's a limit for how much you can withdraw. There's not a limit for how much you can make. I believe it's your first 4 months. You are limited to, I think it's $2,500 of withdrawals every month for your first 4 payments or 4 months. I think it's first 4 withdrawals are limited to $1,500. After the 4th one, you can withdraw as much as you want of your winnings. You can't withdraw their money. If you withdraw your money, the trailing drawdown comes back on. If you keep, like, let's say the trailing drawdown says that you can lose $5,000 of their money. If you make $5,000 and leave it in the account, that trailing drawdown pauses. It doesn't trail any further. So you can then, it's a little confusing, but it's like, because normally the way it would work, let's say you made $3,000, right? And then from there, you drop $5,000, the account gets blown up. Even though $3,000 of it was your money and $2,000 of it was their money, the account's blown up because you lost $5,000 like in a row, right? Once you've reached, if you're using the 150 count that I do, once you've reached 5K of your money in the account, as long as you leave it there, the worst case scenario is you blow it if you give all your money back. But they then, like, if you now make 6,000 more, even if you pulled out 2,000, 2,000, 2,000, you still don't have to worry about that trailing drawdown anymore, because worst case scenario, you lose your 5K and the account blows up. But you don't, if you made 5,000 and you left your money in there and you didn't pull it out, and then you made another 5,000, now you have a limit of risk of 10K, because you can lose as much of your money as you want. You just can't lose. They just don't want. They have a limit on how much of their money you can risk. So they don't want to risk any more than $5,000. That's the way to think about it. But if you would leave more than that in the account, and the risk is 100% on you now, then there is no trailing drawdown. Then you don't have a daily loss limit or anything like that once you've made that money, unless you withdraw it. So the best way to do it, and the way that my coach recommended, is rather than just like making $1,000 and immediately pulling it out, like make 3, take 1, make 3, take 1. Do it like that, and then eventually you'll get to the point where you get that trailing drawdown to pause, and you can still take your withdrawals, and you don't have to lower size just because you pulled money out of the account to avoid blowing it up. You can keep trading bigger, because now rather than your max loss being 5K, your max loss is like basically whatever's in the account that you made, like maybe 8K. Well, now rather than trading 2 micro minis, now maybe I can trade 3, right? So if you want to do it that way, that's fine. But like I said, I think the easier way to do it is just to like get more than one PA account and just trade a small enough amount that trade a small enough of leverage that your risk of blowing up is like minuscule. Because like I said, I could survive in there probably trading 3 contracts, but if I ran into 4 or 5 stops in a row, I could blow it up, right? But if I'm trading, let's say 8 micros, the chance that I lose $5,000 in a row without making any money is pretty hard. But I might only make $300 a day with that. But if I have 4 of those accounts, well, now I'm making $1,500 a day, and really none of them have a risk of blowing up. So that's kind of the smarter, slower way to do it, is just to do more evaluations, and then use the trade copier. But like I said, if you want to, you can just leave all the money in one account, and then your trailing drawdown will just pause, and you can just up your size to a max, which is insane. I think for the 150K, I can take 16 minis. They'll let me trade 16 minis if I wanted to on a single trade. So, I mean, you'd be risking a ton of money, right? Like every tick is like, what is that? like $350, $340 a tick, something like that. So I mean, you better be right, but you could do it. But if you have enough money in the account that there's no more trailing drawdown, then yeah, you could keep sizing up until you get to 16 contracts, I guess. But then you'd have to realize that on a bad day you're going to lose 8K or whatever. I'd rather not do it that way. I'd rather stay small and just have more accounts. And that way, worst case scenario, in each account, I might lose $300 or whatever. But like, as long as I have way more win days than loss days, then my risk of blowing them up is like minuscule. And like I said, if you have a choice, you can pay $80 a month to keep the account, or you can pay $250 once. And in my opinion, paying the $250 once makes a ton of sense if you're going to do multiple accounts. If you're just going to get one account and try to build that thing huge, you can pay the $80 a month, right? But I'd rather just have it out of the way and then have a free account sitting there, just like earning money slowly and having very low risk. That's the way I think about it. But I'm kind of a risk averse person. So, yeah, if you live, sorry, I didn't see these. Okay, why did it say on eval say 100 account? Oh wait, here. Oh, I see. I missed a few. Like if you make 50K real, that's allowed. Yes. Why does it say on eval say 100K account on eval? It says max 106K, and loss negative limit is 97K. So go to 97K, then you have to restart eval again. Yes, if you brought the account down to 97K, you'd blow it up and you'd have to reevaluate. You can reevaluate as many times as you want. You can actually reset the account for $80. Sometimes they do sales for like half off. But if you bought the account for, like, I think that 100K account with the coupon is like $40. So it makes more sense just to cancel the account. It's $40 a month, but cancel the account, get a new one for $40 and try again. The max, that's how much you need to make to qualify the evaluation. So once you do that, whatever, like the monthly fee stops once you get the PA account, and then you have to decide if you want to do the $80 a month for licensing or the $250 lifetime licensing. You have a choice for the PA account, for the funded real money account. But for the evaluation, the max is how much you need to get the account to. So for instance, with that $100,000 account, 106, so it means you make $6,000 without losing $3,000. Is what it's saying. If you let profits stay there, they let you lose that. Yes, exactly. After what point can you get greater amounts of your own money sent to you? I believe it's either 4 months or I think it's 4 withdrawals over or 4 months, whichever's longer. So if you took and like I said, the first 4 withdrawals, it depends on the size of your account. But for the 150 that I do, I believe the limit was $2,500, but for the smaller account, it might be $1,500. But I think it's $2,500 max for your first 4 withdrawals in your first 4 months. But if you took, like, remember, you can withdraw twice a month. So if you withdrew twice a month, it would be your first 8 withdrawals that would be limited to that level. And then you could pull out as much of your profits as you want immediately after that on the next pay period, which is every 15 days. So, and you have to make the request for the withdrawal before that day. So like right now I could ask for the money and it'll get sent to me on the 15th, right? And the max, since I have not met the requirement to do 4 months and or 4 withdrawals, whichever one is longer, right? So I need 4 months and 4 withdrawals. My limit with a $150,000 account, I think, is $2,500. Even if I made a ton of money, I can only take out $2,500 every 15 days. But once I've taken 4 months, once 4 months has passed, I think it's 4. Is it 2 or 4? I think it's 4. And in those months, you did a withdrawal. Not necessarily 2 of them, but at least 1 withdrawal in those months. And you then the next month, the next pay period, you can ask for as much as you want of your money. I hope I explained that right. Yeah. So let's say you have 200K of your money there. After 6 months, you can take everything out of yours if you want. The only thing is if you had it in there for 6 months and you want to take more out than $2,500 or whatever the max is, you'd have to make sure that you did 4 withdrawals before that. So it makes sense, like I said, like my coach suggested, to like make 3,000, pull out 1,000, because your withdrawals don't have to be the max. It's just any withdrawal. But the min withdrawal is $1,000, I believe. So you have to at least pull $1,000 out 4 times. That's the way to think about it. Before you can pull out big amounts. Otherwise, there's a max. But once 4 months have gone by, and each of those months you made at least 1 withdrawal, that limit goes away. Like I said, I'm pretty sure it's 4 months. It's all in their FAQ, but that's basically how it works. Is there's a certain number of months that need to be withdrawals happened, right? If you make, like, let's say you had a winning month and you pulled $1,000, and then you lose a little money for 2 months and you don't pull anything out, and then you have a winning month and so you pull out $1,000, even though 4 months has gone by, you've only made 2 withdrawals. So you still need to make 2 more months where you've had a withdrawal. But you could take the max amount, which like I said, I think is $2,500 for most of the accounts, on the next withdrawal. But you wouldn't be able to take out all your profits. If let's say the next day, you have like a huge day and make 10K, you wouldn't be able to take the 10K out the next day if you haven't taken withdrawals in over 4 months. So and in my opinion, that's why the $80, that's one of the reasons the $80 licensing fee per month is not as good of a deal as just paying the $250 ahead of time. Because assuming you're not going to just like try to like gamble with the account and take all the money out right away. I mean, some people might do it that way, but if you're planning on like keeping the thing running, like once you've paid that $250, that thing runs for free. So it doesn't matter if it takes you 6 months to get to 4 withdrawals. It still doesn't cost you anything, anything more, I mean. But if you choose the $80 a month licensing option for every account and you had 20 accounts, like that's like what, $1,600 every month just in licensing fees. Like you'd make it back, but still it's that it gets pretty cumbersome. So in my opinion, if you're planning on having multiple accounts and you reach the PA, you qualify the account, suck it up, pay the $250, be done with the payments from then on, and just grind slow and don't blow it up. That's basically what my coach said with the evals. Treat them like a rag doll. Do whatever you need to do to qualify it, but like don't be afraid to blow up those evals. But that performance account, you got to treat that like a baby, because it takes time and money to produce that performance account. So you want to respect it. But the evals, like, I mean, you can get as many as you want. You can try as many times as you want. And they're so cheap that, like, I don't know. It kind of makes sense to take a little bit more risk just to, like, speed things up. But once you get that performance account, you don't want to take unnecessary risk anymore. So hopefully that makes sense. But yeah, I mean, if you had a way, where like let's say you had a system that usually makes $200 a day, but on trend days you maybe have a chance to make 2K, like something like that. Like it's still gonna take you 4 months to liquidate that account and get all of your money out of it, basically, because you'd have to do 4 months where there's a withdrawal. So you could do $1,000, $1,000, $1,000, $1,000, and then the next month you could basically take everything out of it if you wanted to. So main thing is if you did want to clear it out of big gains and 5 months of small withdrawals, you are then good to go and take it all. Yes. Yes. Right. Exactly. As long as you ask for it before the payday. As long as you make the request before the payday, yep, yep, that's how it works. But like I said, just be aware that if you take all your money out, then like the trailing drawdown's back, so you'd have if the way you made all that money was by compounding and like risking more of your money because you could without risking losing the account. Once you pull all that out, if you don't leave that safety net in there, for the 100K account, that safety net would be $3,000. It's whatever the max drawdown is. If you don't leave that safety net in there, then you have a trailing drawdown just like you did with the eval, and you wanna tread lightly, so that you don't make 2,000 and then lose 3,000 and blow up the account, even though you only lost $1,000 of their money, since you lost $3,000 in a row, and you didn't have the safety net in there, the account will get canceled. So until you have that safety net of the same amount that they have at risk, basically, until you have that money at risk of your own in there, you gotta trade small. You should, and conservatively, right? But I mean, after that, it's kind of like trading house money eventually, But I mean, like with like Top Step and some of these other ones, they've got max daily limits where like it's completely stifling if your plan is to trade bigger someday. Like if you hit that daily max loss, you're done. So thankfully Apex doesn't have a daily max loss. So as long as you manage it correctly and you understand that you need to like keep the safety net in there before, if you don't want to deal with the trailing drawdown which is how they limit how much they're going to lose. Then like you can technically trade as big as they allow. You just have to build the account first. So it is time consuming, and chances are you're not going to pass the first eval. Chances are it's going to take you at least 2 tries, because even if you have a good edge, like it's not easy, unless you're going to do it with real small amount and you're going to take time to do it, which is fine. Then then it's not that hard. But if you're going to try to push, 3-4 contracts at a time, chances are you're probably going to have a couple bad days. And all it takes is, if you're trading 4 contracts with that thing, all it takes is like 4 stops and you're blown, right? In a row. So, and like I said, I don't think there's any shame to that, as long as you know what your plan is. And it's not just like, like as long as you know that your expectancy is good to do that, and chances are you're going to make enough to qualify an account, and then you can turn it down and go back to the micros. I don't think there's anything wrong with that. But, you better have an edge, because otherwise you're just going to keep blowing up. So it's, personally, what I do is I trade 2 to 4 minis with the $150,000 eval, and then when I got the PAs, I flip to micros and do 8 micros, up to maybe 15 to 16 micros max, until that safety net's there, because I don't want to have one day like ruin me to the point where I'd have to trade so small just to avoid the trailing drawdown. Like, it's not worth it. Because I'm not in a rush. I've already paid the $250 or whatever. I just have to not blow up the account. So as long as you treat it with respect, that's all I'm saying. Just treat the PA account with respect, and like mess around all you want with the evals. Just remember that they do have a monthly fee. So, you should be trading on them regularly. You don't just want to have them sit there and cost you money every month. But at least it's not at least it's not 200 some dollars. It's like maybe 40, $50 a month. And like I said, it shouldn't take that long to make 3K or whatever. It shouldn't take that long. I qualified 2 accounts in February and March. So, yeah, I mean, it shouldn't be that tough. As long as you've got a good system. You do need to be a consistent winner first. That's first. Be a consistent trader first. Have a system that actually has an edge. But if you got that, yeah, it should be doable. And then, like I said, the great thing is then you don't have to worry about the market like stealing your account and whatever. I mean, you might, right? But at least if that happens, it's only your winnings. They're not gonna, you're not gonna be liable for, like, your house isn't on the line if like some sort of technical difficulty goes and like they have a flash crash during that time. Like they can't steal your life, that they take that risk. You might lose the account, but that's your max loss. And I don't know. I just feel a lot more comfortable with that. Yeah, good idea. I was planning on sleeping too, but they won't let me out of this trade because I'm still winning. So I guess I could just cover it. But it appears to be working. Now look, we got an aggressive trader here, right? Star down, way at the low. So this needs to be defended. Otherwise, they're going to trap them. So that's something to watch. And then let's just check on this higher time frame. So the higher time frame has a blue dot here. So they may be trying to turn this into support. And then we're getting very close to this VPOC, which I drew over the consolidation range of the last few hours. So I don't see any reason to like immediately exit, but they are trying to hold this volume anomaly here. So they might. I guess I should probably get rest too, though. That would be the only reason, is that I kind of want to trade tomorrow. Yes, exactly. It will post as a recording. You can hit when you go to YouTube on my channel, like subscribe, and then go to live. There's a choice for videos and live. It'll be under live, and it'll be called something like a promising new setup, something like that. It'll be the newest one. But most of my videos on YouTube are under the live section because I do them as live streams, and most of them are like explaining stuff on the algo, looking at new doing journal entries on trade days, like reviewing the actual trade days step by step, or talking about some sort of concept. Like most of my, and then I've got live streams of me actually trading as well on there. So, but yeah, it will be available on YouTube as soon as we close it. Exactly. But appreciate you staying up. Like I said, I'd like to go to bed too. I mean, I guess I could just leave this. It's not horrible just to leave it on, but then I'd have to get up before the econ and exit it. I guess I don't have to, but it would be irritating to sit here for an hour and watch it and then like sleep through the econ release, the jobs numbers, and see it come all the way back to my stop. That would be pretty frustrating. But I mean, I do have brackets on there, so technically I could try to get filled down at like 1300 and just see if it happens. But I think what I'll probably do is just exit and get some rest. But I'm just kind of waiting for it to like stop dropping. and once it does that, I'm just going to exit it. I'm up almost $400 in the eval. So yeah, honestly, that's a pretty good trade. Let's see if they give me just one more flush here, and I'll cover on the flush. The purple bar under the star is not what I want. Let's get out. I'm done. Going to bed, covering at 13:46:50. I don't know if it's optimal. Probably not, but I'm tired. I want to get up in the morning, a couple hours, And this is getting long. So I got what I wanted out of the trade. Got it here. I took it on this time frame. So I got in here a little early. Stop was here. And final exit here. So about 1-to-1. Happy with it. That's how it's supposed to work. Probably could have left it going for a little longer, but that's okay. All right. Off to bed, folks. Cool. Glad you're subscribed. Excellent. Thanks for subscribing. And if you guys want to, if you're watching this later on, you want to contact me, Twitter at RedBenTrader. If you want to learn more about the algo, you can email my coach, Simon, trade, the letter N, word perform at gmail.com. He has a room that we pay monthly to be in where he shares a screen, gives us trade setups, and helps us with coaching. And if you tell him you found him through me, he'll give you a free week in the room to check it out. So if that's something you're interested in, give Simon an email. But yeah, I mean, I agree with you, Mr. K-Man. I think we get a lot of choppiness, but you know, who knows? Sometimes these econ releases can do some crazy things. So we shall see. But I think it was hopefully a useful conversation, and now I've got it journaled so that I can also review it in case I forget how this setup is supposed to work. And if I find some more optimizations, what is that word? It really is getting late. Optimizations. I don't think that's right still, but I will share them if there's further ways to optimize this specific setup. I will share. Yeah, definitely tired. That was full. I only took two. I only took two contracts for that trade. So because I could have technically added on the pullback, but I didn't. And so 2 contracts is like my normal. So, all right. Good night, folks. I am ending it here. I'll see you all soon. Have a good trading day tomorrow, and thanks.